So all this time, Magnificent's been a bot, an AI bot. Well, I'm gonna have to go grab some sardines. $0.90.
Magnificent answer is not a bot. UVE got false information.
False information. Now my average is down, so we're going to see here. I now have an average of 106. And I'm going definitely against the wind. Oh man, it's a tight, so tight.
Magnificent answer thinks that at some point today puts will be setting up. Info for Florence and Rose.
IWM had a big breakout. Not bad run.
Affecting the market. Morning trade live is back after this.
Dow Jones up almost 300. The NASDAQ at 330. I'm just going to sit on these for a bit and see what happens. Google pulled back to the 63. I can go big on these if I want. Meta's at a triple bottom for the last 4 days. Right now at 605, 68. Come on, baby. Run back up. Come on. A little more. About even. Jimmy's about even. Oh, yes. Now I'm green. Jimmy didn't panic. Jimmy didn't panic. Jimmy didn't panic. I can get out right here at 116. There's 120. Fuck yeah. Now it's time. My name's Washboardjim. I'm the founder of the Sneaky Snake Trade Strategy, where everybody doubted me, but he comes out a winner. VWAP, or did you doubt me? I like VWAPper. But he's not here now. I take it back, everything I said. Marty he didn't doubt me. I can't believe I made it. Freedom. Freedom. Hello. My name's Kim Kardashian. I was watching you trade sticks. Stocks, ma'am. It's not sticks. I was wanting to know if you could come over, teach Chloe and me how to trade stocks. If I ever saw Chloe Kardashian, you know what I'd tell her? So you're a nasty chick. Man, it feels so good. I was worried. I mean, the suckers went down to 66 cents. I'm going, no. And I said, and right when that hit that, I said, I wanted to add more. Oh no, 133. I said, I said, I want Dad, but I didn't do it. I said, I want to go in big. Dadgummit. $260 I left on the table there. Randy? If she was offered on a platter, I'd still say no. I'd say, what's that fish smell? Now, if it was Kim, I'd probably go for it. But she's got too big of a butt. Okay, well, I feel good. Pass another volume, please. I mean, it's hard looking at a stock keep going up and up and up, and you're going, the stock's going, and your entry's going down, down, down. Down $800. I was down $800 at one time. That's hard. I mean, I wasn't breathing hard, but I was silent. And they used to tell me when I got silent that I was usually in some kind of trouble. So United Arab Immigrants say its air defense are currently dealing with missiles and drone attacks originating from Iran. So that's the news. Google came down and hit the 200, and so did AVGO. So this here is called the Parson Pivots. And right now we're above resistance on the Parson Pivot on the SPX. I'm going to clean this up. I can't read it. So we came down to the previous high, and that's been finding support. And that's probably right at close to Parsons pivots. Look at that bounce up off the SPX off support. Go to the 1 minute 5 day. Look at that bounce. That's beautiful. I don't know why I didn't just turn around and get the calls right after that. Because we bounced off the 100 here, 100 here, and the 100 there. That would have been that'd been a good trading strategy right there to take that trade. And the calls are back down to 70 cents. I'm going to go make my lunch here in a second. Haven't ate. Yeah, I did eat this morning. I got to watch it, man. Sometimes I go on these eating binges. SanDisk. Oh my God. SNDK. Look at that thing take off. I was looking at that yesterday, and them option calls were way expensive. I bet you the ones that were cheap would have been, I mean, I looked way down the sheet. I said, should I try it? And I said, man, these are too far out of the money. I let me turn up the air. Warren Buffett's missing out on another good run. Yeah.
As well, let's see what they have to say, particularly around these fab capacity constraints. Nate, always love your work. Thanks so much for jumping on and joining us today. Nathan Peterson there, Director of Derivatives Analysis, Schwab's Head of Financial Research. And coming up, it's time for the morning trade. We will take a closer look at Palantir, which reported earnings yesterday afternoon. Morning Trade Live, we'll be right back.
PLTR.
Stay connected to what moves markets. Download the Schwab Network app.
I will find the perfect entry.
Wherever you are.
I'll find the perfect entry for PLTR. First, I go to the weekly. And I erase. Oh. 134.85 is what I have. And right now we're at the 63. So we could be 120 would be a strong buy. But 125, yeah, 120 to 125 for PLTR. Citigroup raises price target on PLTR to 225 to 210, maintains a buy. Wedbush maintains price target to 230 with outperformed. PLTR hits fastest growth ever as a public company. So, how can you be bearish on something like that? The guy comes out and yesterday and they said that, man, I don't know. I don't see how you could be bearish on something like that. Just because it's hugely overbought. I don't know, I'd like to buy it. Joby. Joby hit my support that I had an alert set, and it's bounced up about 20 cents. I got 135 for PLTR. Army asks missile maker to hack their own weapons. PLTR hits the fastest growth ever as a public company. Well, I think I will go make lunch because I can't keep food off my mind. And I kind of wish I'd have got back in them puts again. YouTubers, I thought I was on, but I guess I wasn't. Get ready for the SPY again. We're coming back to the 100. This will be the fourth hit. If it wants to be strong, it has to bounce here off the 63. If not, and I still think the 200's in play. And we're right at 121.68. That's what I said. Ain't that right, YouTube? Say yes. Boy, Dwight Yoakam's looking old.
A little bit of all this that I took with me after we moved to Ohio, and then I went out to California. I wrote a lot of stuff about being born down here in Kentucky and all the folks and family that I had back here still. And this is one that I wrote for my grandfather, Luther Tibbs, who did this for a living for 40 years. For all the men and the women that still do it over there in southeast Kentucky. When the whistle blows in the morning, and I walk down in that cold dark mine, saying a prayer for my dear Savior, be the rain sweet, the sunshine, the moonlight. When I win, will be over. When will I be broken down? Yeah, when I die, dear Lord in heaven, please get my soul in that cold dark ground. I still breathe, my poor brother, and I still hear my dear old mother cry. But that night, they came and told where he lost his life, down in the big show mine. When I win, will it be over? When will I...
Dwight Yoakam, you looking all old and straggled. I met him once. Can I play you a song, Dwight? Well, can't right now because I'm getting ready to go on stage. PLTR 134.85. I will set an alert above it. And Jimmy will take that trade and go long. Could probably start now, go in small and add, but I'll wait. I mean, they're really raising the price target up on it. And yesterday they were coming out with a downgrade. And I argued with the dude. I said, what? What the hell's wrong with you, man? Do you have better sense? Okay, we just knifed here on or we went up on SPY. Bounced off to 63, so that tells me it's still bullish. Last resort. Now this is kind of strange. Oh, the 200 EMA. Let me put the 200 EMA on here. And it's so much different on the TTM squeeze. Oh, that's the VWAP. Dumbass. That's the VWAP. But that still don't... That's the 100. Oh. Okay. That should be pink. Oh, I got the... Well, I don't want to screw this up, so let me do this. There we go. Yeah. Now just keep remembering that's a VWAP. I'm going to raise my alert above the 200 because that's where I want to take this trade. Right now you got a bull flag after a breakout, so we'll see. And I'll be right back. Judge.
Only on Schwab Network.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis of breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time.
with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Back on Morning Trade Live, looking at how some of the major chip stocks are faring today ahead of AMD's earnings. So AMD is up at 3% right now. Qualcomm's higher. Intel, we know the story there. It continues to push higher as well, up 14%. Broadcom up 1.3. Nvidia is the laggard of the bunch there, down 0.7% as we are seeing the Mag 7 dragging its feet a bit, but AMD very much is the focus, given its course going to be reporting this afternoon. So let's go inside out on this name. Joining us now is Hendy Susanto, who's the portfolio manager and research analyst over at Gabelli Funds. Hendy, so nice of you to join us. What's AMD going to tell us?
Thank you, Sam, for having me. So I think we are expecting like strong bid and raise on AMD. Last week we heard like strong capital spending plans for calendar year 2026. AMD being the number 2 player and or leader in AI GPU is well positioned to capitalize on that. And we are also expecting some tailwind from the server CPU market as reported by Intel. And then AMD is winning market shares in server CPUs and then client CPUs as well.
Are we worried about being capped by foundry capacity constraints at all, as some of the analysts have highlighted?
Yes, so I think that issue has been raised, and then in my conversation with CEO Lisa Su at AMD Investor Day, she emphasized that AMD is a strategic top customers of TSMC, so AMD has favor when it comes to capacity allocation, like well ahead of let's say like a demand projection. So I don't think that is like a primary issue going into earnings.
What about valuation? Got any thoughts on that? Given the run-up obviously we saw in April?
Yes, so valuation, I believe that consensus has not reflected what Intel said, that we are seeing like price increases in CPU, supply constrained environment, and then we expect AMD can trade at, let's say, like 35 times price to earnings ratio, and then therefore I think a $400 of AMD share price is somewhat tangible in the near term.
What have we got to hear about the MI400 series, the Helios stack as well, the rack system, I should say? I mean, as far as updates on progress and anything to give an indication as to whether that's on track. What are you going to be looking out for?
So I think what we are looking for is that, first of all, whether it's on track or not in terms of the volume and then the yield. The yield will dictate the profitability. It will be an incremental ramp up in the second half of like 2026, meaning that the significant sales will be in 2027. But I think we can point out that the OpenAI and then the Meta multi-year deal will start bringing revenue stream in the second half of 2026. So we are expecting some step up in data centers revenue for AMD.
Just a quick one, what else will you be looking out for the call as far as visibility is concerned?
As far as visibility concerned, there has been some positive bullish view that the CPU addressable market will grow significantly because of the supply constrained environment, favorable mix, and then price increases. That's one. And then second one, I will be monitoring the strength of AMD in AI inferencing. So AMD strength is AI inferencing, and we shall see. I think the notion that agentic AI will see a strong year is very favorable to AMD. With regard to Helios, it's a rack system. So we shall see how strong AMD is against well-established NVIDIA's ecosystem. And then so I'm looking forward to hearing like more commentaries on what second half of 2026 may look like.
Hendy, brilliant stuff. Thanks so much for the preview. Really useful stuff. Hendy Sasanto there, portfolio manager and research analyst over at Gabelli Funds. Really appreciate your time. Let's trade it now. This is going to be the next test for the chip trade with George Siller, senior markets correspondent for Schwab Network. Just walk us through an example trade on this name, George. As we say, I mean, this has had a big run up. Obviously, we've continued to see the stocks climbing to these all-time highs, which is obviously going to be a really important catalyst then for this afternoon in the broader chip space. Just walk us through how you'd approach this one.
Well, I mean, ideally speaking, just looking at the trend, it's very bullish on AMD, and looking at the market maker move as well. I mean, right now it's around $27, so that's essentially a 1 sigma or 1 standard deviation expected move in dollars and cents, plus or minus. So call options are quite expensive right now, especially for expiration this week. So what I'm going to do is I'm going to structure a bullish trade in this case as well, going into this week's expiration in 3 days or on Friday. Basically, I'm going to structure a way to cheapen up call options with lower debits expense by structuring unbalanced butterfly. So essentially what I'm going to do is I'm going to buy a 345 call. I'm going to sell 2 of the 370 calls to help finance that, as well as buying 1 of the 405 calls. So that 345 to 370 is approximately the market maker move, and of course another $35 out to tap it off at that 405 long call. So altogether, this four-legged structure cost you approximately earlier today about $4 a share or $400 a contract. So the whole premise behind the trade is, ideally speaking, for the stock to stay confined on the high side of the market maker move, right around the 370 strike. That's essentially where you achieve your max profit in this trade of $2,100. Your total expense on the trade, if it hits at least 349 as your break even, is $400 on the trade. But the challenge is if it blows out above the short strike, you start implying some losses, to which point there's the max loss potential of $1,400, and that only occurs if the stock hits 405 or higher by expiration.
All right, we'll be watching. Currently trading a healthy 3% higher into this report. Obviously, there's been some concerns around upside being capped by the foundry capacity constraints, as Hendy also pointed out. But looking for a beat and a raise, that's the expectations. Market share, visibility, CPU, total addressable market. George, appreciate the trade, for example, purposes this morning for us. We've got stocks looking risk on. The Nasdaq at a record high, as we've got Intel up, we've got Micron higher by the tune of 10%. The stocks at an all-time high. We continue to see some nice gains, particularly across technology. So we'll be continuing to watch these markets, and of course the headlines coming in thick and fast. But for now, it looks like oil is sitting at 101, and that is helping put the wind in the sails of these markets once again today, as it is retreating. Thanks for joining us here on Morning Trade Live. I'm Sam Vardis. Download the Schwab Network app, available in the Apple App Store. Trading 360 with Marley up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders,
and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. We've got a great show for you today in our 360 Spotlight. We'll dive into the earnings from Palantir, which is lower despite an earnings beat and raised guidance. Then in our Disruptor, we've got AMD taking a closer look at that name ahead of its report as the stock has rallied 60% so far this year. We'll get those earnings after the close. And then in our 360 round, we'll take a look at Shopify under some pressure after its outlook wasn't as strong as the street was expecting. Lots to get to, but let's head over to the big board and see how things are faring this morning. We've got more record highs here. The S&P trading at 72.54. That's up 0.75%. The NASDAQ touching a new record, up more than 1% this morning at 27,972. On the Dow, we're 0.7 higher. We're at 49,277. And the Russell 2K is up 1.4% at 2835.60 right now. Green day across the board. As we take a look at the 10-year, we're still holding firm with 440. The dollar at 98.24. Gold is higher. We're up 1% in a third right now at 45.92.80 a troy ounce. Crude oil getting closer to being below triple digits, but we're still there, 101.63 a barrel, but down 4.5%. And Bitcoin 81,690 continuing to rise above this 80,000 level and staying there after getting above it for the first time since January yesterday. I do want to welcome in Alex Coffey, though. Take a look at one of the names on the move this morning. We're talking about Coinbase today, Alex. Making a move we've seen other companies do, but cutting 14% of its workforce.
Yeah, and as a result, diverging from Bitcoin a little bit. You just talked about Bitcoin. Nice day, nice couple weeks for that asset. Not the case for Coinbase today, as the shares are down 2.5% on my last check. But as you mentioned, Coinbase announcing they're cutting up to 14% of their workforce, impacting about 700 employees. The company citing volatile crypto markets and a push to restructure around AI. CEO Brian Armstrong talked about a focus on AI-related skills, a flatter management structure, and some teams perhaps even being reduced as much to only be left with just one person fulfilling those roles, combining engineering, design, and product across one single person role. They expect most of these cuts to take place in the second quarter, and they expect around $60 million in restructuring costs. And this is, as you mentioned, sort of a broader tech, fintech really, and crypto-centric theme that we're starting to see. Crypto.com, Block, a few, Gemini as well, recently announcing similar. We do hear from Coinbase later on this week, so we might get more details during that conference call as well.
And interesting timing, because as you mentioned, we do hear from them on Thursday, but when we saw Block give similar news, we saw Block skyrocket when they released the work cuts as a part of its earnings report. Coinbase coming in about 48 hours in advance, but moving to the downside on this move. So an interesting market reaction. Have we heard from the sell side at all on this?
A little bit. Dan Dolev from Mizuho is skeptical around the AI justification, sees this as more crypto-related volatility, and just the fact that so many of these assets have lost so much dramatic price over the last year. And if you really put it into context around that sentiment, last quarter they took a bunch of markdowns on some of those assets and actually led to a $667 million net loss for the quarter for Coinbase. And their revenues for quarter four, which again was their last quarter, were down 20% year over year. So, you know, you want to frame it positively, and of course the company's always going to try to, but analysts are sort of looking through that. But we'll get more details this Thursday or when we hear from them. So
yeah,
looking forward to that.
An interesting week, Alex. Thanks for breaking that down for us. Initially saw a pop on this name, on this announcement, but now down about 2.5% for Coinbase. Thanks to Alex Coffey, our co-host of Next Gen Investing, for breaking that one down for us. Do want to welcome in our next guest, though. Take a broader look at the markets. Joining us now, Tim Nyland, CFA and Co-Chief Investment Officer at Synergy Asset Management. Tim, it's great to have you on the show. Now, you say we've got three forces driving the markets right now: earnings, AI CapEx, and geopolitics. Now, I'm saying all-time high, another record high again this morning. How are we ignoring geopolitical risk right now? Because it certainly does feel that day on many days.
No, it's a great question. Great question. Basically, what's going on is we've got companies reporting just rock solid earnings. Q1 earnings season, you know, we're more than halfway through. We've got close to 15% earnings growth year over year for Q1, and we've got that on top of roughly 10% revenue growth. So basically, what corporations are doing with these record earnings is they're riding that right into guidance, and guidance is extremely positive. Some companies are obviously making note of the geopolitical headwinds, but right now it's really the corporate earnings season and CapEx spending that's really trumping what's going on with the geopolitical environment.
So with all that said, in the three forces that you pointed out, are we really in a fundamentals-driven market, or are we in this liquidity and narrative-driven market that's sort of being disguised as one?
You know, it might be a little bit of both. We've obviously got a ton of momentum, but believe it or not, if you look at just the S&P 500 in aggregate, the earnings growth is there, and so is the margin growth. So the valuations are justified from that perspective. Interestingly enough, though, if you strip out the top 10 names from the S&P 500 and you start looking at margins, you could argue that those are flat to perhaps even down since 2022. So there's an argument to be made both ways, but for now, if you're looking at the S&P 500 in aggregate, valuations are justified. That margin expansion is there, and the underlying earnings growth is certainly there for now.
And I'd love to get your reaction to some of the market response we've seen to some of these earnings. I mean, we've gotten incredible reports from companies that have been met with these downward moves. I mean, Palantir, there's an argument to say Palantir had an excellent report yesterday, and we're seeing Palantir under pressure today. A couple small flags in there that analysts are citing, but what has been your thought about the reaction to the numbers that we've seen?
They can be volatile, right? That's a pendulum that swings both ways. And if the street doesn't like something, the investors don't like one metric that they're keyed in on, those names can be taken to the woodshed, and we've seen it. We saw it with Meta. We saw it with the CapEx spend. Certain companies react one way, and other companies going to react another way. So, and that's kind of where we're at in the cycle right now. We've got valuations are obviously high, but justified. But that's a result. That's what happens.
All right, so let's talk about that cycle and CapEx spending on AI, because that's your third force driving the market. And I don't know anyone that's going to make an argument against that not being a primary driver right now. Is this CapEx cycle, yes, it's AI, but is it fundamentally different from what we have seen in past tech investment booms? Or are we just setting up for another digestion period here? I mean, what makes this one unique compared to the past?
This one is unique because it probably has a lot longer runway than most people think. And you can see that. I mentioned earlier about, the margin on the remaining 490 companies in the S&P 500. The fact that AI still has such a long way to be integrated in the remaining 490 companies in the S&P 500 means that we've got just a tremendous runway. And I think if you look at where the smart money is, right, you're looking at the corporate boards of the hyperscalers, they're not going to commit this type of CapEx without having some sort of an ROI on the back end. So they certainly see the demand and experiencing the demand, and that's what we're responding to as investors.
And I'm glad you brought up the ROI, because we keep talking about how this earnings period is when we really need to start seeing some return on these investments. And I think we're at $800 billion in hyperscaler CapEx now. I mean, these numbers almost feel made up. They're so astronomical. But in terms of what kind of returns you need to see to justify the spend, where are we at going forward? Because I know a lot of the responses were in that the market thought they got enough return from some names and not from others, or we couldn't justify the spend, particularly when it came to Meta. But what are you looking for specifically when you're looking at these, knowing how long the runway is? How much return can you realistically expect, knowing how early we are in terms of the full scope of this AI build-out?
It's a little bit different for each company. I mean, we have models on a lot of the different companies. They're all a little bit different. And that's what really everybody's trying to pin down, and that's why you're seeing these volatile valuation swings. Most notably companies like Oracle, Meta.
Now 10 o'clock.
There is an unknown.
10:10.
Every company is going to be different. Every company's ROI on this
11:10
is going to be different, and the structure of all the deals are different. The manner in which data centers are being financed, and so there's a lot to sift through for each and every company.
And you pointed out a really interesting thing that I think is very important to talk about in your notes that you sent over, that roughly 75% of our GDP growth has been tied to these AI-related investments. Now, at what point might we see a pullback in AI spend, because we are in this point where investors are demanding so much return and they want to see a return on the spend, which means we may start to see it slow down a bit to try to get some of that return. When does it start breaking? Should we be concerned that it's too concentrated and then could negatively impact our GDP?
You know what? I'm so sick of hearing this
question, and I think investors can really boil it down to, and your audience can boil it down to the simple fact that,
they've been at that for a year now, almost, about the AI spending.
As of yet, so that's really.
I'm not in that camp.
And then once that happens, you'll start to see multiples start to contract on that anticipated deceleration in growth. But right now, when you see
Short a chick if you think it's that bad.
Q1, obviously, these corporations are seeing growth accelerating, and the demand. And you can see it in the backlog as well. The backlog is growing as well.
And I want to talk about the third driver that you pointed out here with the geopolitical risks, and you laid out a really detailed
fear-mongering woman. Fear-monger.
Report, you could actually see that that consumers were actually beginning to pull back on larger ticket items that showed the highest cost increase, and that wasn't evident from the headline number because the headline number was strong.
Well, really appreciate you being with us, Tim. Sadly, we're run out of time there, but really appreciate the insight there, and thank you for walking us through the forces you think are driving the markets right now. Tim Nyland, Synergy Asset Management. And we've got a lot more for you today on Trading 360. Next, we've got the big three coming your way. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the technicals as always. Joe Teague is joining us to take us through the trades for Apple, Alphabet, and NVIDIA. That's next on Trading 360 on Schwab Network.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. Here to take us through his picks for today, Joe Teague, the portfolio manager at Rational Equity Armor Fund. Joe, great to have you on the show on another record high day. I mean, I might as well just start saying that every day or making the assumption I'm going to say it at some point. But what are your thoughts on this market? I was just talking to my last guest about how we're just sort of looking straight through any geopolitical risks right now.
Yeah, thank you for having me. It's great to be here. It's exciting to watch this market continue to run. Earnings have just been great. I think we should just start there. Surprising a lot of people, thinking that maybe consumers will be pulling back a little bit with the geopolitical uncertainty, but they haven't. Earnings have been fantastic, and the story remains the same, just the continued implementation of this AI narrative, and it keeps on growing, which is just fun to watch.
Very fun to watch, and Rick and I were joking off camera just before the segment started about the 3 that you picked today, and he made a joke. Oh, I had to look all these ones up, some unfamiliar names, but I kind of love that you went with some huge names, and especially as we're buying for the most valuable company, there's another race underway. So let's talk about your first pick here, little known company called Apple.
Yeah, they were maybe slow out of the gate on the AI, but they are starting to successfully pivot. They were perceived a laggard in the AI race, but now they're becoming a dominant implementator. They're focusing on their own core strengths, their premium hardware, their ecosystem, which they have a moat built in, and they're turning the threat of AI into a massive upgrade cycle for them. The record-breaking performance of the iPhone 17, their strategic R&D ramp-up show that this company is finally leveraging its install base to own the AI user experience rather than building chips to win the customer.
All right, Rick, I know you have feelings about Apple and its AI strategy, but as we look at the technical setup here, its most recent earnings report and the rally that we've seen after that has helped to get into positive territory this year. But what are the technicals telling us?
Yeah, and it's not anything derogatory. I don't think I'm saying something controversial if I say that Apple is perhaps more of a laggard in this field. Siri is not exactly the strongest virtual assistant that's out there right now. But when we do look at our charts here, we can see that after a decline off of these highs, 288.62, we had a series of lower highs. But here we had this breakout to the upside. Meanwhile, we had our earnings event. We had a nice push to the upside, and it seemed to solidify near this 277 level. Old highs, subsequent lows, highs repeated again, and then that's where we held on firm in terms of our closing prices, and we're getting a bounce today. So an interesting setup that we have here. Notice that we didn't quite make it to these old intraday highs as well. So that still remains the upside boundary to watch out for. If we were to break lower, 265 stands out. This green line here, highs, lows, breakdown point, high points here, and then low points here. So we have several of these kind of sticky horizontal price levels that we keep seeing the action stop and start at, so those can be worth keeping track of on your trading journey here. So 5-day EMA in dark blue, 276.61. That's about where we had our open and lows so far today here. Our RSI, our measure of momentum, continues to trend upward here. A little bit shy of breaking into that overbought threshold of 70, though. That's what the bulls would want to see in conjunction with a further breakout. Now we can see our volume profile study shows that the heavy trading activity area on this chart is right close to where we had our recent short-term range here. 270.78 is our volume profile point of control. So we can see if we start to drift back down to 275 or so, that's where the volume really starts to pick up. And that's also where we had those old highs, so that could be a supportive area to watch out for.
All right, and this next name to another a little known company here called Alphabet or Google, depending on what we want to call it today. But it's sort of in a race, a very close race. In fact, closer than I realized it was today. With Nvidia for most valuable company by market cap, they're within less than $100 million of each other right now. So let's take a look at Alphabet, which has meteoric rise, best performer in the Mag 7 so far this year. Why is Google pick 2?
Yeah, I'm excited about Google. It's been one of my core holdings for some time. I think it's kind of important for us to just take a pause and note this. It was really big news when NVIDIA became the largest company in the world. That was a big ramp-up part of the AI race. I think we're moving from like the hardware to the implementer of the AI cycle. So I think that's just
double top.
And just noting this and thinking about Alphabet, like they got up to a really slow start in the AI race. They had that, I think it was called Bard thing originally. They just jumped and landed on their face on their launch, and they've rebranded, quickly retooled, and I think they've changed their company much for the better here. Googling something is much better experience than it used to be. They've implemented Gemini into their search process. Just a fantastic tool now that I think just is very interactive and usable for people to do. They have a partnership with Apple. I think that was a really smart thing to do to get scale in getting their...
Okay, I'm eating lunch now. And we're kind of hitting some resistance levels here.
Again, a very interesting setup, and we were teasing a little bit, but it's pretty obvious to see why someone would be interested in trading these names just based on the liquidity and volume alone here. These are very active names that many people have eyes on here, and Alphabet specifically here reaching these new highs as well is quite notable. So 5-day EMA in dark blue, 378.43. That would be a short-term boundary to watch out for. If we did break below our trend line, then we would also have our 21-day EMA in teal coming in at about 348 for potential support. RSI overbought above the 70 threshold, actually above the 80 threshold as well. Yeah, that's a fairly extreme reading. RSI only goes from 0 to 100, so anything above 80 is pretty noteworthy here. So look for price to continue making new relative highs along with the RSI for signs of further confirmation. Look for that relationship to start to break down for a potential slowdown signal. Now we can see for volume profile, a small pocket of activity at these higher levels up here. Doesn't really stand out too much against the bulk of our activity. Mostly things took place down here, 300 to about 320, and then around 340, things really started to level off at those old highs. So keep an eye out for that. Volume spike after earnings also can signal high conviction on the part of traders in this bullish move.
All right, and this last name, the one vying against Alphabet to be the most valuable company, still holding that title for now. But of course, they've got earnings coming on May 20th, so that could change. But we're talking about NVIDIA as this last one. Take us through your thesis on NVIDIA.
Yeah, so they've had a little bit of trouble compared to the rest of the Mag 7. You could say a lot of the tech too. They're not doing poorly. I shouldn't say that, but it's a little more murky compared to the other companies. But they remain the backbone of the AI industry and ecosystem. The demand for running models still requires a boatload of computing power. So they're facing more, but they're facing more and more competition from the very hyperscalers they started to provide that power with, beginning with, obviously, Alphabet and Amazon, to name a few. However, I do think the rising tide of all AI demand will lift all sales, including them being the biggest. Their dominance is challenged by internal chips from other companies, like I said, but the sheer volume of global compute needed is going to be a sign to me that they're going to remain central, if not a contested player.
All right, and as we look at NVIDIA trading a little bit lower today, down about 0.5%, but they've got their earnings coming up. It will be interesting to see how much this commentary around China affects anything. Jensen Huang coming out and saying they now have a 0% market share in the country after previously having a 95% market share. But what is the technical setup, Rick, as we go into this earnings event on May 20th?
For sure, and internal chips, all well and good. Advanced computer chips are not something you just throw together on a Thursday afternoon. That would take significant time and resources and effort. Anyway, though, we can see these old highs here, 212.19, were a high water mark that we did indeed surpass in terms of both our intraday and closing price here, 216.83, our new high. However, things faltered somewhat here. We pulled back to this 195 area, old highs.
Okay, this has to hold here by puts.
During this range-bound period that NVIDIA saw for much of the last 3 quarters, really. So now that's the low point that we've established once again. So that
SPX. The 7240s right here. This is risky, but I'm doing it. At 370. Sardine bread with a salad. And zesty Italian dressing. Damn it. I should have added one right there. Sardine cake with black olives. We're at 420. 440. Come on, drop. Now you're at the 63. Uh-oh. I'm up $40 a contract here. There we go. Drop. We're at 450. I'm up $90. I mean, 80. Now I'm up 90. $470. I'm up $300. Continue. Give me a little more. Warren Buffett, you're missing out on a good run. CNBC was acting like they were, again, trying to protect the retail trader. They really have a arrogant presence about themselves. $430. I can get out earlier. We've dipped below the 63 before and bounced up. And I am done with lunch. Jim, you're up $50 a contract. Should you sell them? You were up 100. Come on, drop, baby. Do what I want you to do. One big old fat candle. Been kind of stuffy. Most of all the temperatures set at 72 in the rest of the building. That feels pretty good. But where 13 is, it's kind of stuffy in there. And that's where most of the complaining is. Looks like it wants to, it's not really wanting to pull back yet. Jeez. I'm gonna go make my coffee. My after dinner coffee. I really don't want to miss this trade. Pretty easy to get faked out. Always clean as Jim.
Jim, this is Chris over at Waldinger Corp. How are you guys?
Doing good. Chris at where?
Waldinger? We met at the IRS building a couple months ago. Showed me around for the HVAC equipment.
Oh yeah.
Actually asked us to quote them some solutions to some of the thermostat challenges they've had.
Yeah.
And I have an estimator that would like to see the building in person instead of just the descriptions I've given you in pictures.
Yep.
I could coordinate a time with you guys for him to meet you over there to look at it and talk about it.
Yeah. Anytime it's best for you.
He said he had a meeting that would probably run him into the afternoon this afternoon. We probably could do something at 2 or 3 if you could be available that late.
Yeah, they leave the building around 4:30.
Okay. Okay. Well, his name's Ty Franks. I'll tell him that you could be available then.
Yeah.
Just send your phone number.
Yeah, give him my phone number and have him call me, and I'm just about a short skip and a walk away from there.
Awesome.
But
Would you appreciate it?
okay. But they're gonna talk. What is she wanting? Did she call you?
Ashley, I spoke to Ashley Friday. I think it was Friday, might have been Thursday. Today's this morning. Yeah, I talked to her, and then she emailed me and wanted us to put potentially replace all the thermostats so there was a Wi-Fi system so we can control.
Okay. So I guess you know more about it than I do. I just point out the thermostats. Okay, and then that's going to be in the other building too, the one's right next to it, the empty one.
Potentially. I know the challenges he has to do with current tenants.
Okay, that's the one we'll look at then. Okay.
I'll let him know.
Sounds good.
Thanks.
Thank you. Who just called me?
Hello.
Some guy you spoke to Friday wants to meet me up there around 3 o'clock to look at the thermostats. Is there anything else you want me to show him while I'm there? The inspector will be there on the 13th, right?
number one way they can help their merchants, because with higher conversion, of course, there's less dollars that have to be spent in other areas to get that customer, but it's still uncertain how long that will come to really impact the numbers. And I think we see that a lot of folks still don't have a lot of good data on impact or understand how AI is using product information to make decisions. And so I think a lot of that is still being worked on and being learned about.
And we've continued to see the moats questioned across software as a service as a part of this massacre. And Christopher, you mentioned the beatdown that we've seen on the software names. What do you view as Shopify's moat today? And also, how secure is it in this AI-driven landscape, given how early you both say we are?
I think Shopify's moat right now is weakening. And that's just because the ability to develop software, the ability to develop, what this new agentic commerce world is going to look like is still very fluid. Where Shopify has been strong is getting those small and mid-sized merchants to have a very scalable, efficient, easy to operate online.
Shops took a pretty good hit, 21 bucks.
A ton of market share there, and they benefit from the tailwind of more and more commerce trending online.
I'm still in the put.
Where that can work against them is, how many of those customers are left? Where is the growth story? Is it U.S.? They've had good international growth, particularly in the past quarter. But when we look at Shopify, we have to remember that most of the things they sell are really consumer discretionary items. We're facing, if this war goes on, if energy prices stay high, that's going to put a crimp in people's pockets. And it's not just about growth. You need your existing customers to continue to spend for a platform like Shopify to make money. And if we're in a more inflationary environment, some of those purchases may be curtailed.
All right, well, Shopify trading down about 12% this morning following its earnings report. Really appreciate you both joining us to take a closer look. Owen Carr from Spreetail and Christopher Davis from Hudson Value Partners. I also want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download our free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. I'll be back with Sam Vadas with Market on Close at 3 Eastern, 2 Central with lots of earnings, including AMD. But don't go anywhere. Fast Market with Giant King Hall is coming up next.
Back to even. And again, I didn't buy the dip. Too busy.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now.
Carl.
They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly.
Come on.
It's relatable, it's practical, clear, understandable, and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable,
Shop. I had 116.23.
growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab
109
coaching is that clients get access to 9 different sets of expertise.
We want to engage with you in chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping
Spies at the
step by step along
100
with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Well, well.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Noon Eastern here at the New York Stock Exchange. And Wall Street is in a buying mood today with the NASDAQ hitting a new record. Let's get right into a check of your scorecard as we hit the lunch hour on Wall Street. We've got the S&P 500 better by 0.75% there. When you look at sectors, at the top of the leaderboard is materials, but it's followed not too far by information technology, industrial or consumer discretionary rather in the third place position, followed by industrials. The Dow better by 0.5%, NASDAQ 100 up by more than 1.25%. Russell 2000 rallying 1.5%. Here's the roadmap for today's show. We'll look at example option strategies for Disney. It's got earnings due tomorrow. Plus, like Folio will be along with new sentiment data on AMD. That's the heavy hitter, with results due after the bell today. And Uber is also on our radar today ahead of its results.
Uber.
Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You've got Kevin Hincks joining us live from the CBOE, and Joe Mazzola, head trading and derivative strategist, Charles Schwab. All right, guys, Wall Street on the move higher today as oil prices ease. We're still in triple-digit territory, but at 102 now. Amid signs the U.S.-Iran ceasefire remains in place. Kevin, your take as you look across the markets, broad strokes.
I think the reverse correlation between crude oil prices and the market really strong today. I think a lot of what worried us yesterday in the market with higher crude oil headlines, being bombarded throughout the day with headlines, really hurt the overall market. But today, almost the exact opposite. The market feels good about itself because of lower crude oil prices, and it feels like there's some at least tapering off of the tensions from yesterday. So when you look at the leadership, you mentioned
that's strange.
Information technology yesterday. Within information technology, even on a down day, it was software that kept that part of the S&P 500 at least firm. Today, it's up because of semiconductors ahead of AMD's earnings after the bell. So, you know, big day for the market, kind of a recovery. The VIX is, back down below 18, still elevated, but nowhere near where it was. And it was March 29th that we hit 63.53 on the S&P 500. It was March 27th that the VIX hit 31.05. Why is the VIX lower? Look at how far the market's rallied, Diane, Joe.
Yeah.
Yeah, Joe, your take, that heat map showing a lot of green on the screen there.
Well, Kevin mentioned software. Look at some of the announcements we got last night. We got Atlassian, we got Twilio, both of them being raised. So they're lifting names like Salesforce, ServiceNow. You got Intel up around, initially 10% on that Bloomberg report that Apple has held early discussions with them and Samsung about U.S.-based chip manufacturing. So
we need a big bounce
for the tech sector. Palantir earnings, I know we'll talk about those in a moment. I mean, those were fantastic as well. It was just a big evaluation story with that one. So you're seeing lift across the board. I think we got 9 of 11 sectors that are up. And I think Kevin was also correct in saying that, the news coming out of Iran, I don't know if it softened, but it didn't elevate. and we saw crude oil prices go down. So, you know, it gives another lift to the market. Now, that being said, you know, there are still a couple things that I'm keeping my eye on, and that is participation. We've got a nice broad rally today, but we're still, you know, slightly above 50% of the stocks above the 50 and 200-day moving averages. We're not seeing as many, you know, all-time highs or 52-week highs in this latest rally. So it still is a very much a tech-led
Shop
rally,
new low.
that can sustain. I mean, we've seen that now for a couple weeks. It's just, you know, from a
Netflix. Coin's down almost $6. Coinbase is gutting middle management and rebuilding around AI. There you go. AI replacing jobs. Yeah, I don't know. I don't know what kind of business I'd be in right now. If I was young, I don't know what I'd get into. Probably, you know, I was a fine-looking man back in the day. I'd probably would have got back into social media and became a politician. It's now 11:07 around here. Man, I enjoyed that lunch. Very good. Look at penny stocks. Bind is at 93. BURU is down 10%. And CRML up again. Dips have been good buy on that one. AMC, Snap, an alert. PLTR just hit one of my supports. PLTR. $134.85 is what I got. I'm gonna look at the option. Everybody else upgrades it, but these people. One person downgraded it. And that was yesterday, before earnings. What the fuck? I don't know why it does that. May 15. 140 strike. 2 of them. Okay, now I've got 3. I sold 2 and had 1. Now I've got 2 more. On the SPX. I'm making it hard today. Man, PLTR is so close. New low on Tesla. And CRM is at the 200 for quite a bit now. I'll be right back. Disney and AMD. Disney's earnings are coming out. Remember, he's got new CEO. They got rid of Bob Iger. Or they're getting rid of him. Which I think's a good deal, because I can't stand the dude. I'm gonna bring my phone with me.
Intern, this place is
Richard.
It's where I get all your office supplies. Your golf balls.
We got one at 370 and two at 220.
TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. On the earnings front, Disney gearing up to release its quarterly results tomorrow. And the question is, can CEO Josh tomorrow bring the magic back to the Mouse House? The stock is down more than 10% year to date. It is still, though, up roughly 9% on a year-over-year basis. Here's where expectations stand. Wall Street is projecting the entertainment juggernaut will report earnings of $1.49 per share on an adjusted basis on revenue of about $25 billion. That implies roughly 5% revenue growth and a slight uptick in profitability. Time now for the tug of war on Disney. For that, let's welcome back in our co-hosts Kevin Hinks and Joe Mazzola. It is bull versus bear time. Before we get to your example trades and get your thoughts on Disney, Joe, I'll start with you. I'm curious to know your thoughts, especially not just in the context of their results. You wonder if, how the customer, the consumer will look over at Disney. Your thoughts?
I'm still thinking about your LL reference, so I'll get to Disney here in a second. Here's the thing with Disney. They're going to have to show that this partnership with Hulu, this streaming, now that they're not spinning off ESPN, the streaming partnership is generating margin. And here's what I mean by that. Disney's has been talking about kind of a 10% year-over-year full-year streaming margin target. Well, that's way below Netflix, which is printing about 25%. So, they've definitely got to catch up in there. The parks generate about 70% of Disney's operating income. And so they've got to show that people are still coming. And we've been talking about concerns around the consumer and consumer discretionary stocks and their spend. Disney's fallen in that trap, as you mentioned, in terms of kind of what's happened with the share price. So I think that those are two big issues that are going to have to be addressed. And when you talk about experiences and you talk about the parks, you're also going to have to talk about Disney Cruises, which they are now susceptible to the changes in fueling prices. They've had stock a few recently, and at the same time, not only is Disney susceptible to fueling charge, but so are their cruise liners, the people riding those cruise liners. So they're going to have to make a decision whether or not they want to pay those bills, and those are hefty bills to ride those cruises. We had to tell the Mazzola kids many years ago that we would fly to Disney and hang out there as opposed to riding on a Disney ship.
Wow. All right, Kevin, it's true. Like, there's the question, can households still, do that big Disney trip that a lot of households have on their, not just bucket list. Some people do it annually, right? Can they keep doing it? And then what does streaming look like? Kevin, your thoughts?
Well, I can tell you guys, in terms of Disney experiences, I've done them all. I've done everything. I've done the parks in Florida, California. I've done the cruise, and I can tell you, everyone's happy that goes to Disney, except the guy paying the bills, the man or woman paying the bill. They're a little less happy. I can tell you that right now, because they are not cheap. Now, about Disney, their experiences have been carrying this company, right? The discretionary spending. Remember, the cruise ships have had a rough go of it lately, right? Some of their guidance has been lower. The problem with a company the size of Disney is, and I remember this from my days trading General Electric under Jack Welch, you're always in something that's doing well and something that's not doing well. What's not doing well? Potentially the cruise lines. Remember, other industries are going through rough times. How about linear TV? What are they going to do with ESPN under a new CEO? Do they spin it off? Do they find a way? Does it fit in with what Disney's doing? Remember, you look at Disney, or you look at ESPN right now, a lot of gambling. A lot of gambling on ESPN. Does that fit with Disney's long-term strategy? It's a tough call, but experiences are doing well. Streaming, they got to show more improvement, more profitability in streaming. And then what's going to surprise us on the downside? You know it's going to be linear TV, but what about the cruise ships? Diane, Joe?
Good question. All right, let's get into the example trades. Joe, we'll start with yours. What is your approach today?
Yeah, I mean, look.
PLTR moving up a little bit on them options.
Playing on the stock right now. I'm just not positive that unless there's some really big surprise, which would be a surprise, this stock is headed for much higher than where it is right now.
Oh gosh, another Disney pumper.
126 or so, not too long ago. Just below that. But the bottom line is this: it's in a downtrend. It's being carried by the heavy weight of all of these different operations that it's trying to manage, as Kevin mentioned. And what it hasn't shown is it hasn't shown a margin growth outside of the experiences. Like I said, the parks generate 70% of their operating income, despite being 35% of the revenue.
126 where?
A way to better the margins within the other businesses, and this is a stock that's probably got some room to run. However, I don't know if we're going to get that in this call. To me, that seems like that's a longer term project. As you mentioned, shares down about 10% year to date, down about 24% from the 52-week high price of around 125. The price action's been weaker, but we're below the 50-day moving average right now. It's still trading around a 19 times forward PE. That's the low end of the last 3 years, but at the same time, you're just not getting much growth. And option data right now is pricing in about a 6% move. So what I'm looking at, Diane, is I'm looking at selling the May 15, so not this Friday, but the next Friday, 105, 110 call spread at about $1.20 credit. You should probably still be able to get something similar to that, I would assume, right now. It gives you a little bit of a buffer up to that break even, which would be about 106.20. If you look at where their price is right now, right around $100, that pretty much lines up with that expected move of around 6%. Remember, that's an expected move, so we don't know for sure and whether that's going to happen. That's just based on standard deviation. But what the option market, at least in some of the activity that I'm seeing today, it is continuing to set up a little bit more for some downside hedges. You're seeing a little bit more put activity. You're seeing a little bit more hedging activity in terms of the skew. And with the current IV percentile rank around 74%, that is a little bit more beneficial for selling premiums. So that's why I did what I did.
Joe, it's going to be interesting that both of us use the Thinkorswim platform to gauge what the expected move is and use that in our strike selection, right? You sold the 105, 110 call vertical. Now, you made the choice to go out another week. Why? Because Disney is historically a pretty low premium trade. So how do you get more premium in the same trade? You go out a little further, right? The risk is a little different, but at least you get some premium in on your short call vertical. So the risk on your vertical is the width of the strikes, in this case $5 minus whatever credit you take in. If you take in 120, it's 380 is your risk, but it's a high probability trade. You're about one standard deviation above the market. What I looked at, that's the bearish side of our segment here today. I looked at something like this. What's the one thing that really jumped out?
You don't look too good today.
Disney's becoming a valuation play. 14.8, 15 PE is historically low for this name. It spent most of its time in the last 10 years between 20 and 30. So it can move up just from a valuation perspective. So what I did, I looked at the May 15th, buying the 100 call, and then selling this week's, the May 8th 105 call. So using that same short strike that Joe used, just in a different week. Remember, monitoring what we think the expected move is and using the tools on the platform to help us with our strike selection. I did the 100, 105
Come
call
on, drop.
diagonal. I spent about $260 on it. This is just because, you know, it's a risk-defying strategy. You're looking for a move up towards 105, and the risk on this is whatever the debit paid, Joe, is. So a bullish play and a bearish play, both focusing on the 105 spread. Diane, that's Joe's short on the call side. That's my short on the call side for the strike. So two different ways to use calls, one bearish, Diane, one bullish.
All right, good stuff. True, a bull v bear debate there for Disney ahead of its quarterly results. We've got cash tags coming up. The team from Lightfolio will be along with new data on AMD. It's got earnings due after the bell today. Can its outperformance continue? Keep it right here on Schwab Network Fast Market. We'll be right back.
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Keeps bouncing off the 100.
Trading
Not
at Schwab
fair.
is powered by America.
Almost hit my 200.
Giving you even more specialized trading support.
I think I might have triggered it.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy...
Give her a big hug. Oh, I didn't see the dog in there earlier.
Trading at Schwab
They have a doggy.
is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle.
Man, I really want to get into PLTR.
Complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
If Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock.
Stroke?
To see this person that I've always seen as a force in our family be vulnerable.
Vulnerable.
Yes. Now we're in the car together almost daily. I start
Take
to realize,
10.
what can I pick up from my dad?
Kid, can't you get it right?
For a long time.
Jim's my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Chelsea, pull back, please.
Welcome back to Fast and Martin here on the Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the Seabowl. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Lightfolio, with new data on AMD ahead of its quarterly results, which
Oh, he don't look happy today.
So, Andy, this one's been a strong outperformer
Andy's
so far
pissed.
this year. And on a year-over-year basis, even better. On a year-over-year basis, that stock up, what is it, more than 200%, about 250% on a year-over-year basis.
More than that, baby.
So what does your latest data look like in terms of the strength, and can that continue?
It looks good. You know, AMD is a stock we've been bullish on since June of last year. It's up like, 170 something percent since then. It's been an absolute, monster runner. That's, honestly, that type of setup is what gives us a little bit of pause going into this earnings event. I think the company obviously is executing very well. They've got a great tailwind behind them. There's, the thesis of getting in last year was very solid. That was, that number two in an industry where number one can't keep up with its orders. And,
$76.
Spot to be
That's
in.
more
So
than
the
just.
market caught up with
That's
that,
more than 200%, baby.
affirmed that, but now
In
we're
a year.
talking about a stock, an extremely expensive, and when we look at Lightfolio data, the consumer demand levels, the
400 and some
visits to
percent,
the website,
500%. Where you getting
precedes
your numbers at?
taking a lot of new institutional type of contracts. That website visit levels are dropping off from their peak. Still,
That's a
very
parabolic
strong, but
run.
dropping off from the peak, and we just think that at this point it's probably time for
I'm still in my
AMD to take
SPX
a little
put.
bit of a breather, and we remain very bullish on the semiconductor space. We remain bullish long term on AMD and NVIDIA. Now we're just at the point of a valuation check, and how does AMD grow into this valuation that they have achieved? It's going to be very difficult to do. I think they're going to start running into some of the problems that NVIDIA ran into with, actually being able to supply the orders that they have. So, great company, great tailwinds.
It's a good problem to have.
Concerned about the run in the price getting ahead of what the company can actually deliver.
Andy, I start to form an opinion as I read and I watch on a daily basis. And the run that AMD's been on, along with other names like Micron and SanDisk and all these companies, they have all run. I can explain why that might be happening. But why is that happening while NVIDIA is struggling? Right now, Andy, here's the valuations. The forward PE on AMD, 43 to 45 range. The forward PE on NVIDIA, the clear leader in GPUs, 24 to close to 30 range. So they have basically lapped NVIDIA, who is the clear leader. And, there was a point not long ago when we joked about a pairs trade between NVIDIA and AMD when they were both around $175. Now, look at what this thing has done. Is this just a too far, too fast? The bar, I don't think I can see the bar. The bar is so high going into this earnings, Andy. Two things. Why do you think AMD's running so much? Is it the combination of the GPUs and Intel, who they're a competitor with? Or is it just a look at the relationship between AMD and NVIDIA? Why has AMD almost climbed past someone? And Andy, NVIDIA's coming out with the Vera Rubin chip soon, and so they're going to have another advantage. Give me your overall opinion on AMD more and the relationship with NVIDIA.
Well, I think part of it is that portfolio managers at this point don't get any bonus points for owning NVIDIA. You know, you kind of already had that in your portfolio. If you were paying attention to AI at all, then NVIDIA was already in your portfolio. And the only way that you get paid,
Iran
to
respects us, huh?
to show that you know what you're talking about is to go to the
Oh,
second
Jimmy doesn't have his
button,
headphones on.
the SanDisk, etc. So
He has them on now.
that actually became a really crowded trade as well because NVIDIA was already so crowded. I also think that there's just the law of
He's
large
here.
numbers with NVIDIA. People don't believe that it can continue to grow at the same pace and same acceleration rate that it did before. I don't know that they're right about that. I think NVIDIA is probably the best company in the world, so it's definitely not one I would bet against. So I just think a lot of money that had to flow into this space simply got tired of buying NVIDIA. They got bored with it, and they knew that it wouldn't be able to,
I'm waiting.
light up their reports that they.
Baby, you're never on time. I waited for you a half hour last night. I got more than one. I got that from someone else. This is the very beginning of a legendary conversation with the legend, Washboardjim.
Jimmy, why is your foot not working? Make it work.
I'm trying. It did bounce a little bit on me and I took some profit, but I'm still stuck. Well, I think I need a jam. I think I need a song right now. So we're going to do one. Get this market to go my way. Coming back down to the 100 one more time. I could get out there, but I want this. I want it now. Jim, you're down $140. $120. Have you ever thought about selling? No. I'm not going to do it.
I did it my way. Yes, it was my way.
Oh yeah, I got a good one. Oh. Suspected spam caller. Hello. I'm an AI robot. May I help you?
Hi, this is Linda, an accounts manager. Calling you from Consumer Services on behalf of Experian. How are you doing?
On the behalf of who?
On behalf of the Credit Bureau Experian, sir. I believe you know what that is, right?
No.
It is one of the three major credit reporting bureaus. The one who monitors your lifetime financial history and credit scores. And right now, I'm calling you because they qualified your profile to drop down the interest rate on your existing credit card on the basis of your good credit.
Here's a song for you, honey. This is perfect timing. In fact, I want to get it on the YouTube channel.
You say you were wrong to ever leave me alone, and now you're sorry. You're lonesome and
L'affaire.
and you say you'd be happy if you could just come back
home.
Well, here's a
Quarter. Call someone who cares.
Call someone who listens and might
Give a damn.
maybe one of your sordid affairs. But don't you come around here handing me none of your life.
Here's a quarter. Call someone who cares. I'm at 255. I need 277. We had would never go bad.
So you're leaving, caught me
We unaware. Slam the door.
fact is you're wrong, girl, that can't be
Undone.
So here's a
Quarter.
call
Someone who cares.
Call someone who listens, yeah,
I give a damn.
every one of your sordid affairs. But don't you come around here handing me none of your life. Here's a quarter, call someone who cares. Yeah, here's a quarter, call someone who cares.
Perfect timing, baby. Hello, I'm his mother. Fallen wedge. No. Man, this market's strong today. We get so close. Oh, gosh. We've got Pfizer coming up in earnings. AMD bounced off the 200 just now. And Shop's down big time. I think my alert got triggered on Shop. Well, heck. This is so embarrassing. PBR. Anybody ever drink that crap? PBR. It's also a stock ticker. Net is up $17. Uh-oh. AMAT's up 21. Applied Materials analysis begins coverage on a bullish note. Morgan Stanley maintains overweight and Applied Materials raises price target to 454. Seaport Global says 500. UBS says 480. And they came out yesterday on upgrades and today. Come on, SPX. You know I love you. I just keep looking at that 72.70 area. The /ES. Done sending triangles set up on Disney into earnings. Tonight's Tuesday night. We got AMD and AMC. And SMCI and Mr. MSTR tonight. Hello, my name is Dwight Oakham. Here's a quarter. Wednesday morning we got Disney, Uber, CVS, we got Beyond Meat. What is that? Wednesday evening. Wednesday evening we got Arm, Snap, and BYND. D-Dog, Thursday morning. Irene, Thursday evening. And Open Door, open. Open the door. Oh gosh, every time I look at AMAT, I wanna... That's an old chart right there. Definitely at support. Bouncing off the 100 on the weekly. And then on the daily, we had a double bottom with a triple top. And we're at the 200 EMA. So it's kind of at a support right now, open. Open Door Technologies sliding on Thursday. That was on the 30th. Alliance Capital on the 28th gave it a buy rating. We have 5 minutes to noon. Man, this thing's still bullish as could be. Google had a big pullback. So today's it was the 18th. 2.5 weeks now. My check hasn't gone through the state yet. And last time I called him up, it was the next day it went through. I don't like being late on my taxes.
Live from the New York Stock Exchange. Sam, always a pleasure. Happy Tuesday to you. Cinco de Mayo Day, Taco Tuesday. So many things on this day. But a lot of green on the screen. What's your big
Taco Tuesday, huh?
Yeah, Cinco de Mayo. That's what Ben Emmons has been saying in his tweet this morning. I think it's pretty much bang on here, as you can see. Pretty constructive, you could say. I mean, we walked into this session where oil retreating, yields backing off as well. You've got on the long end a 30-year that's obviously sub 5% now off the back of what we saw yesterday was really keeping stocks in check. But then, of course, you do have some of the earnings that continue to propel things here as well. We'll get through a couple of those in a minute together, but you also have the macro data. We got a lot of it this morning, actually, and basically when you summarize it all, it doesn't change the story all too much. I mean, particularly when you look at the degree of
stabilization, or you could say nothing really much changing about the labor market with respect to jolts. I mean, we did have a little bit of a pickup in new home prices. That was encouraging. You're seeing that reflected in some of the building stocks today as well. We also got the ISM services. Now that came off, but it's still comfortably above the boom or bust line, so nothing's too alarming right now, and particularly when you look at the prices paid component, which is something I look at very closely. It doesn't look like we've seen that transmission from the higher prices paid in the manufacturing to the services, and I would caveat with yet, Alex, because KG was pointing out that can take a couple of months. So that's something to keep an eye on. So all in all, we've got a lot of tailwinds in this market. And I was speaking to Nate Pearson about this as well from the Schwab Center for Financial Research earlier today. There are parts of this market that are feeling pretty stretched at this point. What have you got? Like the NASDAQ at, of course, a record high today. Amazon at a high. Google at a high. The SOX is at an all-time high as well. You're looking at this momentum across memory. I mean, Micron just continues to defy gravity here. SanDisk is up 11.5% as well. Things are feeling very
SanDisk, baby,
stretched, but they're also the parts of the market where we continue to see the earnings growth as well. I mean, we've already heard from some of the memory players. So that's what's really interesting and what's really standing out to me today, Alex. So we'll continue to just see, obviously, what it's going to mean for the chip trade this afternoon with AMD, which is likely to be the next big test.
Yeah, incredibly too, when you look at some of those memory names, like the numbers were strong and then there was those couple sessions where they moved lower in response, but it didn't really set the market back. And it continues to be a situation, Sam, where it's like 4 or 5 steps forward, like half a step back. And hey, for bulls, that's a good setup here as we kind of approach the halfway point of the year, you know, rounding that turn here in the next couple months. But let's talk some of these earnings, because market performance is a lot more mixed than probably gets credit, but the earnings
have been good
across the board, have been really, really strong for
yes,
this
they
quarter.
have.
Still over.
Earnings have been real strong, and I just don't understand why they're so skeptical. These people aren't as bad, but I mean, even Marley come out here asking all them stupid questions again. With all the uncertainty, how come the market just keeps pushing up? It's like she's never watched us go through conflict before. Marley. I was kind of expecting a little bit of pullback today, but it ain't happening. Yesterday was such a beautiful day, I figured we'd have one. If I go one more notch out of this, I'm going to be upset. GWH. I want to see what this one's about. Google a little under 385, but GWH. GWH. Don't have much volume. Announces successful commissioning of long-duration iron flow battery systems. ABTS. No news. Company reported year-over-year increase in FY25 sales results. That was on the 30th. I'll be right back. I'll go get my tea or water. Oak.
Is smaller than
Penn's earnings.
And the good news, though, for pitchers,
They already come out, I think.
3/4 streak of 3 straight 10+% declines around earnings, assuming again that it were to close.
Yeah, they came out last night.
Green,
Popped.
today. But let's talk Intel, because
50%
I'm
pullback.
so fascinated by how quickly the market has changed its tune around a stock. This is a name that no matter what it said, it was never good enough over the last 5 years. Now suddenly, there's just news headlines that tie them to potentially something, and we're just off to the races.
What a story, Alex. I mean, this felt like a company and a stock that was on the ropes, its hands tied behind its back, nose pressed up against the glass.
Correctamundo.
It was really just struggling, and then the company gets a government stake, and then obviously look at it. I mean, trading over $100 right now, 108 and change. I mean, I was speaking to Jake Dollarhide from Longbow Asset Management. I mean, him and I have been speaking for years now, and he was reminding me about a conversation we were having in the fall of 2024 when Gelsinger was forced out, that he was buying this stock at $19, Alex. So, I mean, I've heard so many of these stories this morning as we look at this price action again today. I mean, let's just run through obviously the news catalyst that we've got, and then I'll talk a little bit about some of the performance in the stock, because I find it quite staggering. And Basically, what we've learned today is that there's these early stage talks with Apple, basically to be using or at least producing the main processors here in the US so that it can make its devices. And it's not just Intel they're talking to, reportedly, it's also Samsung, which is interesting. But I mean, this is really fascinating from the perspective that, as the Bloomberg report has pointed out, I mean, Apple has had this relationship with TSMC for many, many years. I mean, it goes back decades. That remains strong, and that's what they say. There doesn't seem to be any suggestion that this is moving ahead just yet. It is preliminary discussions, but this could potentially be a second source here. Look, Apple, I heard this take this morning, guiding for a stronger quarter. Could that have been even better if they had more capacity? And I think that really brings us back to the essence of the story here. Apple needs to look closer to home because of some of the
I feel stupid not buying Intel.
disruption and the geopolitics attached with obviously doing this stuff with TSMC. Not that that would end that relationship, and I think we need to be clear here. But you know, Samsung.
But like she said, 5 years of nothing.
TSMC doesn't actually have the facilities ready for this until 2029. But as Bloomberg has been pointing out here, I mean, finding backup suppliers won't also be easy. We know that there are a number of those in China too, but you know, obviously this is something to think about.
Well, we just hit the 200 again.
Intel itself, as part of this whole turnaround and this comeback story under Lip-Bu-Tan, who remember a year ago was facing scrutiny from the Trump administration, finding external customers for the chip production and for its is really at the heart of that, is really key. So that's the story. We'll continue to track that. But as far as the Intel stock is concerned, I mean, the historic run continues. I mean, what, it ended up the month of April 114%, and it's had back-to-back 20-plus weekly rallies. So for the last 5 weekly gains, 20%, 20%, and then in April it was 9%, 23%, 16.8%. So that's just taking you back a timeline of, say, the last 6 weeks, Alex, just to see this parabolic run that it's been on.
Yeah, I mean, this is, if you're a momentum trader, I mean, this is the chart you're pulling up to make your case, and boy, what a run it has been on. Just extraordinary. I mean, the battle it took to get this stock out of the 20s, I mean, it's seemingly a 3-year process to kind of start that recovery. But once it started, it was like, look out above, apparently, because the stock is almost, you know, I don't know, 5x, more than 5x off the lows that it made just back in August of last year. So extraordinary. We'll see where it goes as it continues to run. Let's talk Shopify. It's under pressure today. I guess it was a guidance-related issue.
Yeah, being punished. It was also just a mixed quarter as well, a bit here. I mean, revenue came in ahead of estimates, 3.17 billion, up 34%, so that was okay. GMV, the gross merchandise volume, 35% growth to 100.7 billion. Operating income at 382 million. Net income, though, well below the street's estimates here at 360 million. Cash flow, free cash flow, 476 million. That was a 15% margin, so that was lower than expectations here. Guiding, as you say, revenue growth in the high 20s year on year. Actually guiding for okay revenue growth here. The company aiming to continue to invest also in AI-driven commerce initiatives. And this is where I think the situation or the issue is here, because it's what the growth story looks like coupled with the operating expenses. So I think that's what the market seemingly is a bit concerned with here. The growth is continuing, but it is slowing down, it seems. While higher costs, there is a view, might actually impact the profitability of the company here. So there is a view that the outlook perhaps was a bit prudent in light of the higher fuel costs, particularly with respect to potential for consumer spending to be, you know, pulling back given the Iran war. Not that we're seeing any evidence of that just yet, but as far as the analysts are saying, Citi, I saw, said that the slightly softer gross margin outlook and higher than expected costs may weigh on the profitability, as I mentioned. You've had Seaport also coming out on the margin guidance, talking about for a high multiple name like Shopify. We can see those numbers creating some modest pressure on the stock. We are seeing obviously a 15% pullback right now. Ahead of this, we were looking at a double-digit decline for the year. And not to mention, Alex, going into this, it was not immune to the software sell-off that we saw. It just seems like that's obviously
The
been
breakout
accelerated from what we've heard today. As you say, the guide, maybe the softening of the growth story, even though they are still growing, it's coming off a bit, and then obviously those operating expenses as well.
Yeah, this stock, though, unfortunately starting to, create a little bit of a negative streak of its own. Third straight quarter of decline post-earnings. So I think investors in Shopify growing a little bit weary, but maybe there is some silver linings in that report, despite the disappointing. We'll find out. Struggling, though, although a little bit more sideways, I would say, the last quarter, which does break the downtrend of the previous 3 months. Sam, we got a lot more earnings this week. Anything else on your radar that you're looking forward to?
Yeah, let's just continue to see if they can keep it up. I mean, obviously AMD is going to be the next cab off the rank, as I mentioned earlier. I know you're going to be talking about that perhaps later in the show as well. I mean, this is obviously going to be the next big test for the chip trade. I mean, it was interesting that you had some of the analysts really raising some of the concerns around the foundry capacity constraints. Let's see what they say on that. But I mean, all in all, I mean, the analysts I've been speaking to looking for a beat and a raise here type of quarter. Obviously with the CPU market share, we want to learn more about that and the total addressable market. So, this is obviously going to be interesting at a time when, as I said, I mean, we just continue to see the stocks climbing up 5% right now. You look at, as I said, some of the memory names as well with these double-digit gains. I mean, this really is the story today. I mean, it's the chip trade that seems to be back in action. It's helped the NASDAQ push to this record high again, not to mention software's losing some steam, no doubt helping some of the hardwares too. So let's see. I mean, that one's sitting up almost 4% ahead of this report card. So plenty of other names, but yeah, I think we just continue to see the AI trade seemingly just do no wrong, I feel like, Alex.
Yeah, seemingly, and more players now. It's not just NVIDIA and everything else. It seems like some of the others have gotten a lot more love lately than even NVIDIA has. Sam, looking forward to Market on Close later as we'll get some of those numbers. Thanks as always for joining us here on Next Gen. We're going to take our first short break. When we get back, it'll be time for Chartmaster. Rick Ducat's going to join us, and we're going to look at a couple names also on the calendar for earnings in Supermicro and Novo Nordisk. We'll be right back.
Monster. And give us one more shot. Right now I'm down 450.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back. Time for Chart Master. Alex Coffey, Rick Ducat. Rick Ducat, lead market technician for the Schwab Network, and he's here with some charts and a couple pre-earnings looks. Let's talk super micro. It's first one on our list here, Rick. SMCI, boy, another volatile name.
Yeah, it is.
Going the wrong direction, though. A lot of its AI kind of trade peers been going up and to the right. That's going down.
Yeah, shorter term looks a little more positive, but after such a severe decline, we're down 55, almost 56% off of these highs that we established all the way back here, 62.36. Certainly not the most encouraging setup here. So when we do look at our price activity a little more closely, we had this large gap to the downside. We hit lows 1948 right here. From there, we did establish a bit of a baseline in the shorter term near about 26 at the low point. If you were to also extend here from this gap at about the 30 level, that gives you a recent high as well. So we have this short-term range. We have this previous range as well between about 30 to 34 roughly. 33.70 is kind of where things topped out if you wanted to get a little bit more granular. But now you could say that we do have this downward sloping trend line competing with the shorter term upward sloping trend line here as we kind of head into this earnings event. So now if we were to look at our moving averages, everything's clustered together for the most part in terms of our shorter term moving averages. They're all coming together right around 27 to about 28 or so. Meanwhile, the holdout is our long-term 251-day EMA, our yearly EMA here in orange, just below the 36 level. So it kind of speaks to your point, Alex, about the swift decline we've seen, that this longer-term moving average is so far above our current price activity as well as our moving average confluence. So while we do have this confluence, though, it gives us a convenient point to watch out for as a potential pivot area. So this could be supportive going forward if we do break to the upside, resistance if the move disappoints and we move lower. So RSI, our measure of momentum, around the 52 mark here. Our green trend line has been broken, but we also have broken through this shorter term red trend line. Momentum can be kind of unreliable as we head into earnings due to the known event risk situation that traders may be wary of doing anything too major heading into what could be a major catalyst. So this is kind of what you might expect to see often. So now we can see that our volume profile study shows that we had some accumulation of trading down here at these lower extremes around 21 to 22 or so. We've so far failed to re-enter this area here that lines up with the old range we identified on our first chart between about 29 to 34, about a $5 range. Our point of control comes in just below 32, so that's the most important area to watch out for in terms of potential resistance. Look at the very heavy volume we saw too after this downturn. So we can see that on those up days we did have volume spikes where volume was at least 50% above the 50-day moving average. So that combined with this node that developed could suggest that some kind of short-term bottom may have been formed here based on this data that we see. Certainly doesn't mean it's going to hold if things start to move lower once again.
Yeah, earnings are going to have a lot to say.
Damn, that was a monster day.
Quick example trade. And in the case today, both these example trades are, of course, independent. They're different. We'll talk a little bit about how they might interact with one another as well. So smaller trades here, though. What we're looking at is selling a put vertical.
NVIDIA's about to break the 200 now.
So collecting 25 cents on this Friday's 25.5, 24.5 short put vertical means you're risking $75, chance to make 25, and a break even at 25.25. Elongated Z risk profile. Really just hoping that SMCI continues its recent attempt at recovery, but at least holds on to those gains. So neutral to bullish here, and keep that $25 credit received, or the 25 cents received in terms of options premium in mind as we bring back in Rick and we shift gears to a very different stock in the case of NVO, Novo Nordisk, but not really that different looking of a chart.
Many similarities between our trajectory here in that we've had a very lengthy decline off of those highs. And we're down 45% from these highs, 81.44. But also, similar to our last chart, we had a very large gap down, and we also have seen a somewhat modest recovery, relatively speaking. Now, this does represent almost a 28% move to the upside, but again, you have to kind of...
MU 642? Are you kidding me?
So in this case as well, this is an ADR, so there's much more gappiness on this chart here. It can be a little more difficult to identify important gaps. So in this case, though, we do have some that stand out pretty clearly. For starters, we have this one here, this low point near about 43, lining up with the prior low. You can see as well that's where we paused a few sessions ago before pushing to the upside. That would be an area to watch for potential support. We also have this area, 47. That was the large gap down that we saw recently here. That stands out as resistance to the upside. Finally, 50-50, another smaller gap down, repeated highs, a breakout to the upside, subsequent lows, a brief period of consolidation, of support, and then the breakdown where it became resistance once again. So 50-50 to the upside as well. To the downside, a small gap here comes in near about 39. That's about the best you could do for potential support based on our price activity that we've seen recently until you get to those lows near 35.12. Finally, when we do assess that idea here, we can see that moving on to our EMAs that we look at, the faster 5-day EMA starting to cross above its slower counterparts here. That comes in near about 43.50 at this point. Our teal 21-day EMA 40.89 lines up with our trend line, so that gives us another potential breakdown point if we do start to move lower. Same deal here though with our last one, 251-day EMA 55.38 gives further kind of a visual cue of how poorly things have gone in the nearer term. Our long-term moving average remaining significantly above our current price activity. Kind of curious though is that we did cross into the overbought area, RSI hitting 71. So in this case where we often see momentum slowing into earnings, now we've seen it push into relatively kind of an accelerated view here. So an interesting, more bullish take based on this indicator as we do head into earnings on the back of this 28% move to the upside, I believe. So now, again, volume profile shows that we did have quite a few takers in terms of trading activity down here between 36 to 39 or so. So that remains a very notable downside area to look at. Again, we can see many volume spikes here, very heavy.
NVIDIA breaking out of the 200.
Low levels here. Also, our point of control comes in this area around where our initial gap to the downside form that we were discussing. Point of control 48.25. Heavy volume kind of all around between 47 to 50 though.
Good stuff. Thanks to Rick Ducat, as always, lead market technician for the Schwab Network. Okay, if we recall, SMCI collected 25 cents in options premium. Some traders may look at their portfolio as one giant living thing, and they might think of this as, okay, now 25 cents to outlay. Selling downside in SMCI, maybe buy some upside in NVO, both of these around earnings. That's what we've done with this example. So it's an upside call calendar that sells this Friday's 48 call and buys next Friday's 48 call. That's the point of control level that Rick just talked about on his chart. And you can see the $25 max loss, the 25-cent debit. You can see how these two trades, very independent trades, very different, and both have their own risks. But one is buying upside, and you can see collecting that downside from SMCI, perhaps interact with that. So just a different way to kind of think about how independent example trades can be a part of one trading portfolio.
That didn't taste
That's gonna do
good.
it for our Chart Master segment, though, today. We're going to take a short break. When we get back, it's time for FOMO. We'll be joined by Jeff Pierce and discuss Palantir.
What do I do,
The
push
stock is under
boil?
pressure despite another really impressive quarter. More on why that is right after this.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at npetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Yummy.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Vulnerable.
Had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab.
Started to realize you're a little late starter, man.
I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. I'm Alex Coffey. It's time for FOMO. It's now our pleasure to welcome in our next guest. That's Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab. Jeff, happy Tuesday. Good afternoon to you. We're talking Palantir. I think there was a lot of hype around this one. I'm sure many of the clients you and your team have a chance to interact with have interest in Palantir. It's a very retail-heavy stock. But regardless of what they say, apparently it wasn't good enough for the market. What'd you make of this this quarter?
It was real good.
Yeah, well, when you've got a stock that's up over 1,300% over the last 3 years, you're going to have a lot of interest in it. And I think that that's the reaction we're seeing today is all of that built into expectations. Now, the stock
1,300%.
over the past
I think it's more than that.
15% year to date. If we look at the earnings, they beat on both revenue.
He actually said 3 years, so that's
They're the fastest growth since going public. What really stood out was the U.S. business. Revenue was up over 100%. Government still up strong, up over 84%. While commercial was really the star here, they were up over 130% on revenue. What we're seeing here from the stock really is that expectation built in. Palantir is not really being judged in a normal way because the stock has had this massive run since 2024. We hit highs at 207 late last year, and they're still trading at a really premium valuation. I think the bigger story here is the whole of 2026 so far. We're seeing some major forces at play, one of which is the valuation reset. After this big run-up, investors are wondering what's priced in already. We've also seen that sector rotation out of software and over into chips and AI infrastructure, which has hit the entire sector.
Dan Ives called it yet another, I should say, validation moment for Palantir. You look at the numbers, this is one of those ones where as a market commentator, as an investor, you have to start thinking about, okay, do I want to explain this away and dismiss it, or do I want to look for the other reasons? And you started to allude to some of those other reasons, and I think that's important too, which is, look, a quarter can be strong, and there can just be macro reasons that a stock falls out of favor, and I think there's a little bit of that going on in software. That said, though, Jeff, it's hard to dismiss the growth trajectory this company is on. It is not in the same boat at the moment as the Salesforces, as the Adobes and the ServiceNows, etc. of the world. They seem to be going in two different directions.
Yeah, listen, investors are doing what they should be doing, right? They're asking some pretty important questions here. Can commercial growth stay this high? That's a really big part of the story. Why is international lagging the U.S.? And what happens if we start to see growth across the board normalize here? But to your point, beyond all of that volatility, the business is still relatively strong. AI demand, that's actually showing up in the revenue. Commercial adoption is accelerating. The AIP platform is gaining traction. Their government demand remains strong. Their margins are very good as well, and they've got a nice balance sheet. The valuation is high, and that's certainly something weighing on investors. And we're seeing that play out on the street as well. Some analysts are saying a massive upside. They're calling it an AI leader, where others are saying this valuation is too stretched and they're remaining really cautious on it. So it's not just investors. The street is looking at the same thing.
Yeah, volatility, it's all relative, right? But I mean, this is still a stock that trades with a premium in terms of...
SPY bounced good off the 200.
We talked about sky-high valuation, but also sky-high growth. from an example trading standpoint, I know it's difficult, especially post earnings, especially when it's not as clear as, hey, beat and raise, stock higher, miss across the board, stock lower. But when you're looking at an example trade, what's one way to think about it?
Yeah, well, so this trade would really be relevant if you believe the recent pullback is over, but you don't necessarily want to chase the upside. So you're going to get paid to take some downside risk here. What we've set up for an example trade is we're selling the May 22nd 133 puts and buying the 130 put to collect about $1. We're creating a $3 wide spread and bringing in $1 up front. The max gain is 100 per contract. That happens if the stock stays above 133 at expiration. We break even at 132. You know, on the downside, the max loss is 200 per contract if the stock is at or below that 130 expiration. The good parts about this trade is that it is short term. It is defined risk. It holds that bullish to neutral view if you have it.
May 22nd, put vertical.
Stay above that 132 break even.
Yeah, it might be a big ask with a stock like this, but 2-to-1 risk reward does give you a little bit of insight into the probability of success. And I think you put it really well, Jeff. This
Why do they get to May 22nd?
It's asking for it not to go down. I know that sounds like semantics, but it does make a difference. Jeff, always appreciate it. You have a great rest of your day, and thanks for joining us. We're going to take a short break. When we get back, we're going to take a step back. We're going to look at the macro market. We'll be joined by Ryan Dietrich of the Carson Group. We'll talk market outlook for 2026.
May 22nd, put vertical. There's no put vertical on here. There is. May 22nd, put vertical. Oh. Who is this Brusky Coco Melon? Sounds like a real scammer to me. What is she talking about? Or he? She? Is it something I said earlier? Do. I'm not in the mood to jump into Joby right now, but it definitely at my support here.
Aw, she's got your smile. Carl. Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income. All this Schwab is everything you need.
I want to see what buying's going to do. I might grab some buying shares.
Invest your way with Schwab. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Don't sound too good.
Welcome back to Next Gen Investing. I'm Alex Coffey. It's now my pleasure to welcome in Ryan Dietrich, the Chief Market Strategist for the Carson Group. He's back here on the network to discuss a little bit about the big picture. Ryan, good to talk to you again. Kind of set the stage here for us. In some ways, if you're on the Everything app, it would seem like you had kind of a contrarian view over the last few months, but ultimately it proved to be the right one. Remaining optimistic. Turns out that tends to be a good place to be.
It is.
A breakdown of kind of how you were seeing things.
I've been very optimistic.
And where we're at right now.
Thank you for having me back, Alex. I appreciate the opportunity to chat one more time here.
So Carson Group in general, for really going on 3 years now, we've been pretty optimistic. We were one of the few places this time 3 years ago said there'd be no recession, said there'd be no bear market. It wasn't very popular for whatever reason having that call, but we've been in that camp. And even at the start of this year, right, we said between 12 to 15% total return on the S&P 500. Even at the end of March, when everything was getting pretty squirrely out there and everything looked really bad, we hung with that because we just thought better times were probably going to come. And we titled our outlook "Riding the Wave." And there's a lot of waves that clearly are still alive and well. And the bottom line, in our opinion, is still a global bull market with an economy that's not spectacular, but maybe going to do a little better the second half of the year. So the macro backdrop is solid, and it's still a pretty healthy bull market in our opinion.
And I know you have fundamental reasons backing that, but you also have historical context to kind of set this up. And everyone knows, past performance, it's not guaranteed of the future. It's not indicative of the future, but the market's been around for a while, and it's important sometimes to put that context to it. So the first one, let's address this idea of sell in May, because we're in May now, and we hear it. There was a down day. What was it yesterday? So maybe that's going to start popping up again.
Well, listen, after the run we've had for 5 weeks, listen, we might have a down week. It can happen. But the big picture, sell in May, go away. It's not quite as popular as it once was, mainly because it hasn't worked. These next 6 months historically are the weakest months for stocks, and most people know this. But 9 of the last 10 years, these 6 months have actually been higher. Last year, during sell in May, it was the greatest sell in May period ever. Those 6 months get over 23%.
Yep.
And I like to use it like an
times have changed.
April, right? April's really strong. Like, we just had the second strongest April ever, so that's really strong. But I looked at the 10 strongest Aprils ever, Alex. May was higher, 9 of them. And the rest of the year was up like 12% on average, more than double the at any time return. So I think a strong April might be a little bit of a clue that once again we could have a summer surprise rally.
Ryan, this is really, really good that you bring
It's
this
nasty.
up, because my co-host Jenny and I were having this conversation back in December, and we were starting to think, let's look ahead to 2026. What kind of parts of the market might do well in 2026? And we both sat there for a second. We said, why overthink this? The stuff
We're going to wait on Joby.
Right now is probably a good place to start, and it kind of makes sense when you look at the data. What's a good indicator for a strong May? Well, what was the weeks leading into May looking like? And it's sort of counterintuitive, especially for those who have sort of contrarian brains just by baseline. All-time highs. It sounds like a scary thing, but the math and the data suggest, hey, markets are usually strong after all-time highs as well. So we've had a good start to the year. We had a good April. We maybe have a good May. When you start looking out to the next 6 months, the next 12 months, what's your general baseline here when it comes to the S&P and beyond?
Yeah, well, globally, we'll talk about S&P, a little global too. We think it's a global bull market. So we're overweight equities, yes, with the money we run at Carson Group, but we have some exposure to other parts of the globe. Emerging markets, I don't know if it's quietly or not anymore, they're up over 15% this year, right? Developed international Europe is up about the same as the U.S. Small caps here in the U.S. are doing well. So like you kind of said a little bit ago, it's like almost like an everything rally. That's not always going to be the case. But one of our bigger themes coming into this year was there'd be no recession, right? We thought we'd see record earnings. My goodness, if we would have done this 3 weeks ago, actually, it might have been the last time we talked, actually, S&P 500 earnings are expected to be up 13, maybe 14% in the first quarter. Now it's 27%, right? S&P 500 2026 earnings are 3.5% the past month. This is unheard of stuff, Alex, but it's why we are, with all the news and headlines and crude oil and all that stuff, yet we're still making all-time highs. And one more, put a cherry on top here, we still like the cyclical areas of the market: industrials, technology, financials. I know financials have lagged a little bit, but listen, that baton gets passed around. Lifeblood of a bull market is rotation. And one other thing on this, we manage a lot of money. We what we call kind of a barbelled approach. We have large caps on one side, overweight, small caps overweight the other side. Mid caps are a little underweight. That doesn't mean mid caps can't go up, so I think most things are going to go higher here. But that's kind of how we're positioning it. Those two areas still make a lot of sense to keep doing pretty well here.
One of the things that keeps seemingly to be the boogeyman around the corner that doesn't keep doesn't show its face is this idea that the labor market is going.
You're with me no matter where I roam. If ever I wonder, if ever we're apart, I know that you will lead me home.
If I should journey across the deep blue sea, I'll never forget these coral shores. Drums of the islands, I hear you calling me, and I'll return forevermore. I love each valley, each grain of sand, each hill, the flowers, the music of the isle. These are the things that I love and always will. Though I may roam 10,000 miles, drums of the islands are beating in my heart. You're with me no matter where I roam. If ever I wonder, if ever we're apart.
She died of a drug overdose. That girl did.
I know that you will
Lead me home. She had a good career ahead of her.
I love each valley, each grain of sand, each hill, the flowers, the music of the isle. These are the things that I love and always will. Though I may roam 10,000 miles, drums of the islands are beating in my
heart.
You're with me no
Matter where I roam.
If ever I wonder, if ever
We're apart. Don't be jealous of that little girl.
I know that you will lead me home. I know that you will lead me home. Drums of the islands are beating in my heart. You're with me no matter where I roam. If ever I wonder, if ever we're apart.
You know, I haven't seen this version.
I know that you will
Lead me home.
I love each valley, each grain of sand, each hill, the flowers, the music of the isle. These are the things that I love and always will. Though I may roam 10,000 miles, drums of the islands, you're beating in my heart. You're with me no matter where I roam. If ever I wonder, if ever we're apart. I know that you will lead me home.
Ikinamene. Another breakout. New highs on the SPY, the QQQ, and the SPX. Thought I heard some noise. Tesla's at the 200 right now. I think that's the last of. Hey, Microsoft broke out, or Google. When I lived in Hawaii, I took this girl out on a date. She lived there most of her life and not been to one luau. And how did I meet her? I think I met her in a chat room. Some kind of, back in 2004, I don't remember. But I took her to a luau. Back then, the tickets were like $120 a piece. You go in there and they have a little concert, the Islanders, and then they'd blow the horn, cooking the pig in the ground. And then when they cooked the pig, they put it up on the table. And they have a big old long table full of food. You walk down there and you grab your food, and then you sit back at the table and watch the sunset and more entertainment. The real hula dancers with the coconut shells. It was a lot of fun. It was a lot of fun. I forgot what luau it was. I got to make up my loss here. There's one here, hit my mark. SPX.
Huh, so
The bad.
I have a feeling that's going to be support on PLTR, but I'll wait until tomorrow. Unless we get like a big fat candle below support. Go check my phone. It's a hard day for me to trade today. Yesterday was magnificent. I mean, look at AMD bounce off the 200. That would have been great. And NVIDIA new low, or at least pullback to triple bottom. And Apple's coming up to a double top. We got a J hook on Meta. One successful put and one bad one. So what do I do now? It's coming up to a double top. It is the worst time of day for me to be trading. God, it hurt another new high.
DRAM revenue to nearly triple this year. NAND, they're expecting that to more than double. IDC calls AI-driven demand, quote, an unprecedented inflection point for memory. So, you know, this is not just a boom that we're seeing, but some lasting runway for this, because you and I talked to analysts after analysts about this, and they expect there to still to be some time left in this cycle, especially when we think about where we are with supply for memory. So big move in Micron today, Nicole.
Yeah, I mean, they're all incredible stocks, folks. And if you looked at SanDisk, you would see that that stock is surging, and now at a record as well. $42 billion in AI deals, locking it in, so it's 10% higher. That's been moving higher. Right now, it's up. I'm sorry, I have. Well, all of these names are on the move, but this one also would be at a record and on $42 billion in AI deals. These names have been incredible. Western Dig is up 5%. Okay, let's move on and talk about Palantir, which really sort of squashed the narrative that AI is bad for software.
Yeah, I mean, look, it had a great quarter, and you know, no matter who I talk to, although on the back of it there are some different analyst viewpoints, but they had strong numbers here, and they were trying to get out from being swept up in the AI SaaS apocalypse that it got caught up in. They had a blowout quarter. Their sales up more than 85%. They beat on the top and the bottom line. Adjusted EPS 33 cents. Revenue more than 1.6 billion. Their guidance was good too. Sales again surging, whether we're talking about commercial or government. Commercial revenue jumping more than 130%. There. The government business is still strong. They raised their full year outlook, and they guided for second quarter revenue above expectations. So there's continued momentum here, but the stock has been pulling back amid this broader pressure on software names and just competition in the AI space. Alex Karp, the CEO, tried to,
There's nothing that competes with PLTR.
They are different, and when you look at their numbers, it does seem different there, but it doesn't seem like they're out of the penalty box in terms of how Wall Street views this one. We know it can often be a popularity contest, right? Right now, memory is the winner, and those in the software space just haven't really been able to come out from under there. It doesn't
boom again
to be done with this one, because you have some on the constructive side who are upping their price targets on Palantir. For instance, you got Rosenblatt. They've got a buy rating. They've raised their price target to 225 on Palantir. That's up from 200. So they think some momentum will return to Palantir, even though it's been a tough year for Palantir this year. On a year-over-year basis, that stock is still higher, but this year-to-date move has
AMD
really
boom
put pressure on the stock. Now, adding in today's move, you're down more than 20% year-to-date. On a year-over-year basis, still up double digits, but that that momentum has been slowing here. When you look at that, Wedbush, they've got an output. We know that Wedbush has been very bullish on this. This is Dan Ives' favorite. He has said time and time again he thinks that this is the Messi of AI, but again, that thesis has been really put to the test this year. Even with the momentum that you can see in the numbers, he says it's still one of their top tech names to own in 2026. He says this quarter is yet another validation moment for Palantir because they're gaining traction, unprecedented traction, whether we're talking about commercial or government. They're expecting that they point out that Alex Karp is saying they expect the revenue to
break the 200, we'll move up higher
100%
on the 1 minute EMA.
D.A. Davidson is neutral. They
PLTR.
have their price target to 165.
Yeah, let's do a quick recap on AMD ahead of the earnings for later today.
Okay, so AMD expectation is EPS $1.30 is what the street's looking for. Revenue expecting to come in to nearly $10 billion here. Analysts are expecting data center sales of $5.6 billion, which would be up more than 50% on a year-over-year basis and would make up more than 50% of sales. AMD's got a big test in front of it, though. Many analysts that I talk to say the bar is high for AMD given its outperformance so far this year. I mean, so far this year, that stock is up more than 60%. On a year-over-year basis, even better, up more than 250%. It has, you know, in terms of if you compare it to NVIDIA this year, it's been the outperformer and the outperformer in the chip space. But can it meet the moment today when it reports its results, Nicole?
All right, Diane King Hall, thank you so much.
Yeah.
A lot of important names there that we are watching, and also watching for any record closes today. I mean, the NASDAQ 100 has hit a new record, the stocks has hit a record, and the S&P 500 has been about 10 points away from a record, as oil now is at 102. I want to talk a lot about tech, and we're going to talk about the chip sector. And Kim Fars from Boca Capital Partners, she picked Intel years ago. And then remember when it sort of really had some bad headlines and it was really a bummer of a stock at one point. And she said, well, you'll just have to wait longer, but it will still hit new all-time highs. She was right. Let's see what she says now. Still to come, big moves. Alex Coffey is standing by with real options trades for Chipotle, Devon Energy, and Intel. So much more when the watch list returns right here on Schwab Network.
This is a real good run. Real good run out of that fallen wedge. Sweet spot. 1, 2, 3, 1, 2, 3. Pull back, boom.
Everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
I don't want to get credit card debt.
Real-time access, data-driven analysis.
It's because you did it, don't mean I want to.
Global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Oh,
Sometimes,
God.
you know, you could have done better. Same goes for where you invest. Level up and
I would have
invest
looked at him
smarter
too.
with
What the
Schwab.
heck?
We are back right here on the watch list. How about you watching Intel rallying once again, hitting another all-time high today. On a Bloomberg report that Apple may use Intel's chip manufacturing facilities for U.S. devices. So the companies have reportedly had exploratory discussions, and Apple
I'm having a
also
hard time
discussing
here.
a potential chip deal with Samsung. In the meantime, you can see Intel is up over 13% today. Once again, hitting new all-time highs. Here's a look. What an incredible move. Up to $110 today, and 1 year 427%. It's just incredible. Shares just continue
It's incredible.
to rally. In the meantime, we're going to go deeper into our tech spotlight. Really was looking forward to speaking with.
Well, the SPX still climbs. Having a real good time. Don't know what to do but sit around and watch you. Three white soldiers standing in a row. About every 5 minutes this thing wants to break out again. New high. Candle after candle. It keeps going. The 7270s from 70 to $4. If it goes below the 9, I'm going to buy put.
Of different types of chips. So we'll have winners and losers in the interim.
Yeah, you know, you also talked about where oil is and how it's been pressuring, and you talked about some of the transports like UPS. Another area that you and I talked a lot about were towers, satellite towers. I mean, we've talked about so many different topics. Before we go, is there anything sort of off the beaten path or that you absolutely love, love, love? I don't want to miss it here, Kim, you know?
I think holding your stocks loosely and not falling in love with them, but looking at them at companies and what they could do for you, that's my first thing. I think the consumer right now is really overlooked, and we're rolling into the retail area of earnings season now, and I think we're going to be nicely surprised at how strong some retailers are. So keep an eye on retailers. It's not just all chips and AI.
All right, Kim Forrest, founder and Chief Investment Officer at Boca Capital Partners. Thank you so much. All right, coming up, folks, we're going to take a closer look at Meta's plan to use the Solana blockchain to pay content creators and what it means for the larger crypto space, why you need to know this. The watches will be right back. The Dow is up right now, 357, and the S&P is 4 points away from a record. Make sure you come right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com. She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
It's a hard trade today.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need. Is
Just doesn't want to give up.
Does somebody need a nap?
Schwab!
That's what I'm waiting for, is for it to give up, but it ain't wanting to do it. Right there's like $30 on that one candle. And then if it comes down, it's not much of a dip. If. We'll find out here in a second. SPY about to make an all-time high. There it goes. And the option didn't do nothing. That's weird. Another storm coming in. Yep. Very windy out there. No, I'm not in puts. I sold them for loss. Just kept going and going and going. I just wasn't going to watch it. Keep doing it. Now we're at support again. If this doesn't hold, I might get them. 72.65s. But even this dip, we're squeezing again between the 21 and the 9, so I don't really want to take it. If I was, I'd jump in right now. See, it's just too strong. About every 5 minutes, boom. Yep. I agree with you. Now we got a triple top. And these are at 260, the 62.65s. So I'm gonna test the waters here. I need like $1. You got an inverted hammer here on the triple top, a red one. But this is a TTM squeeze. On a 2 minute. We have an inverted hammer doji. We have an inverted doji. No, come on. It's at $3. I can sell them here for 40. Crude oil slides as Iran ceasefire stays intact. Jim, you're up $50 a contract. Have you ever thought about selling? No. The 9 crosses over the 21. That last one I had, I could have got out green, but I didn't do it. This one I'm going to wait because I got to get a buck. Jim, you're up $350. Have you ever thought about selling? No. Very hesitant to pull back, that's for sure. There it is. 350. There it is, 360. Thank you very much, Lord. Out at 350 and 360. That makes me feel a little bit better. That was really nice. My music. Who's Broski Cocamelon? Oh, this might be, I might have to go. Always clean, this is Jim.
Hey Jim, this is Ty with Conley. How are you doing, sir?
Very good.
Hey, Chris Clark had sent me your number and said you guys were needing to look at getting some thermostats quoted.
Yeah.
I was just wondering if I could get over there and kind of take a peek at what you got.
Yep. We got a mixture of them. They've been putting, we got a mixture of them. I know that.
Okay. I'm currently at our shop, which is at Division and National.
Yeah.
I was actually getting ready to leave. I've got a 2937 South Claremont.
Yep. It's, do you know where that is?
Not off the top of my head.
It's, you know where Metropolitan Grill is? They're on Battlefield.
I sure do.
It's right behind, down below that building.
Okay. Well, we'll start heading that way then.
And it's the one on the far left when you get down below that building.
Okay.
Back behind it.
All right. Sounds good.
20 minutes?
Yeah, probably so.
Okay.
All right. Thank you, sir.
Yes, sir.
All right. Bye.
Well, I got out of it in time, so now I'm going to go.
This is Ashley.
Yeah, this is Jim.
Hey, Jim.
The guy called me up and said he wanted to meet me down there and check out the thermostats. You spoke, some guy you spoke to on Friday.
Which one? I spoke to a lot.
Oh,
Give you a name or a company?
SWC, something like that. Yeah. I don't remember the name. I don't remember the name.
Okay, well, yeah, I'm trying to get a second opinion and a second quote for some of the repairs.
Yeah. They need to just go through them all and just look at them. I mean, everything.
Yeah, well, that's what he's doing. He's going to kind of just do a whole analysis.
Yeah.
Are you able to meet him?
Yeah, I'm going to go down there and meet him.
Okay, cool.
In about 15 minutes, and I'll... Yeah, go ahead.
Just make sure you get his name and company name.
Okay.
So I can kind of keep a track of who's showing up to
Yeah.
send me whatever.
Okay. You know what you're doing.
Right now we've got a quote for over $11,000 just for one of the 13 systems.
Oh, God. That's too much.
Well, I mean, it's just, we would go bankrupt, you know? So
Yeah.
we need to figure out what the best route is, most cost effective.
I know that one big room, we've never had any problems with it, but now, you know, they're one of the grumpy part of the building. The most grumpy part of the building.
Yeah, well, that's not even the one that needs replaced.
Number 13.
Well, it's labeled incorrectly. It should be number 12.
Oh, okay.
Yeah, Robert said he figured out that was.
Well, Robert's been sending out this other guy, and he's kind of goofy a little bit. I hate to say anything. I hate to say anything.
And that's my concern. You know, I'm not there. I don't know. I'm just giving. I mean, we're at his mercy. We have to have a double check because he could just, you know, he could be paying his bills.
Yeah.
All these service costs. I mean, you wouldn't believe the invoices we've been paying. $165 an hour.
Yeah.
Every single time they're there, at
Yep.
least.
Yep.
And they're there a few times a week. I mean, it's not. We just can't continue on like this. So, and I'm not. You know, he could be 100% right and it's fair. And
Yeah.
I'm sure he is, but I gotta have a double check because ownership's looking at me like I'm crazy.
Yeah. Well, 15 years old. Them air conditioners.
I mean, most of them should have, you know, a solid 5 years left.
Yeah.
But some won't, and I get that, and I gotta make sure I can prove what needs to be done.
Okay. Okay.
So just keep me posted which company it is. You can send me a text, it's fine.
Okay. He can or I can?
You can.
Okay.
Because I don't know who he is. You know, I talked to a couple different people, and they're probably just sending out their tech or whatever.
Yep. Well, I'm gonna head down there and meet him. You just want me to walk, so you just want me to just show him the thermostats and that's it?
I mean, he should be able to tell you what he needs to look at.
Okay.
And definitely show him where system 12 is.
Yep.
And let him know, because I don't know what was relayed to him or not. So if you just want to let him know this is the one that needs the compressor replaced.
I don't
So
know.
take a look at that.
I'm so confused now. I keep thinking it's the one in the 13.
Yeah, it is. It's number, in your head it's 13.
Okay.
But it was wired incorrectly, so it should actually, it goes back to system number 12.
Yeah.
But the thermostat says 13.
I remember a couple months ago, Robert was back there working in the back on a box for like 2 days. And I don't know what he was doing with that. That was the master box.
There's been so many different things done, I don't know.
Okay. Well, I'm gonna head down there.
Okay, I appreciate it.
Yep, bye.
A few points away. Okay, it's time to move into the ETF space and our ETF watch list segment right now. Wes Matthews, Senior Managing Director, Head of Investment Strategy at NEOS, thank you so much for being with us. We think about gold. People love the metals. You have the IAUI Gold ETF. Tell me a little bit about it. Why do you watch this? Why do you love it? Is it the right place to park some money now?
Sure, thanks Nicole, I appreciate you having me on. Yeah, as you mentioned, we try to focus on a lot of different ways for individuals to utilize options inside of an ETF wrapper to generate income actually. Quick background on our firm, we're NEOS ETFs. We built IAUI as a way for individuals to utilize an option or an asset class that's not typically income producing. NEOS specializes in options-based income strategies. Our co-founders were some of the original creators of income plays in the ETF space. And we continue to try to refine that and look for new ways
I'll be back.
to the market and give people a unique asset class exposure with income on top of that. So.
Well, I'll be back.
That's what I would say.
I'll wait for them to harvest what?
Volatility. So we harvest volatility and
yes.
convert that to an income stream.
Yeah, sure. Do you look to gold as the, sort of hedge, the play? What is it really the hedge against? What is it? It's the kind of thing that you can go anywhere in the whole wide world and say, here's gold, and everybody knows its value. Why do you think some of the main reasons people are buying gold right now?
Yeah, so gold has, always been basically a way for individuals to presumably hedge interest rate risk, equity risk, inflation risk. The problem with that is that it's not always able to sustain its non-correlated benefits. If you look historically at gold, it's done a pretty good job as a diversifier against the dollar, as well as equities. But when you get to points of the market where there's turmoil like we're experiencing now in Iran, a lot of times they'll start to break down. If you go back a few weeks, we saw gold spike, and then it really came back by about 15% recently. And so that's typically how people use it, and we want folks to start thinking about that a little bit differently.
Yeah, and we think about what happened in 2025. The World Gold Council noted how we smashed all kinds of records, exceeding 5,000 metric tons for the first time. Purchases of physical bars and coins grew 30% year over year. Do you see, you can't probably compare it to that because that was really incredible for both gold and silver. But do you see that people may start to use this as a strategy? When you think about managing the funds, do you use this as a strategy and bet that you might one day have another sort of run to gold again?
Sure. Yeah, I think for us it's a little bit different because we're not as concerned about what direction gold goes. If you look at gold's volatility historically, it's similar to the S&P, and recently it's been quite a bit higher actually. And so what we want to do is convert that volatility by selling calls strategically on gold and convert that into income. And that does a couple things. One, it makes an asset class that doesn't typically generate income into a way for individuals to harvest that volatility and live off that potentially. Two, if you don't need to live off the high levels of income we produce, which is right now about 12% annually, you can use that and reinvest it back into the fund and utilize that as somewhat of a buffer almost against the underlying movement. So we see a couple different use cases, but it's an interesting way to take an asset class that's typically, some people even call it a dead asset, but it's a way to take an asset class like that and turn it into something that produces income.
And what are some of the other strategies you're using? Are you using other option strategies that you want to share with us at this time, in addition to this one that we covered certainly a lot? Let's talk about other strategies that you're using. I know you have the Bitcoin ETF, real estate, and things like that.
Mm-hmm. Yeah, at the core of what we do is we try to generate income from different asset classes, and everybody's familiar with covered call strategies on some of the common exposures. We have those as well on NASDAQ as well as S&P, international. But what we've tried to do is think a little bit different and say, how can we generate these types of strategies and income off of different asset classes that aren't always typically associated with income? As you mentioned, that includes Bitcoin, Ethereum, MLPs, real estate. We have fixed income as well. And so for us, it's trying to allow people to generate income in any part of their portfolio. I had a call this morning with an advisor, and he made the same comment. He's like, it's kind of amazing because we've always thought of covered calls as S&P or NASDAQ, but now I can look at an asset class like gold or Bitcoin, and instead of just being a cold storage of crypto or a block of metal, it's essentially something that's producing income for me now.
Yeah, you also had energy in there. Is real estate a big opportunity now? You think there's a potential for real estate quickly, Wes?
It is, yeah. Real estate's been a good one for us. MLPs is another one. Those are both asset classes that generate cash flow naturally, but by writing strategic covered calls on top of that, we're able to dramatically increase that level of income, which gives the investor even more opportunity to either reinvest elsewhere, reinvest back into that asset class, or have higher levels of income to live off of.
All right, Wes Matthews, thank you. Really appreciate it at NEOS.
Cool.
Coming up, let's take a closer look at the action that we are seeing. In fact, we'll go right to options trading. We have some big moves for you. Alex Coffey is all over it, and he'll take a look at Chipotle, Intel, Devon Energy. Right now, we are seeing the Dow up 339 points.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. It's time for Big Moves, where we highlight outsized options trades that are taking place in the market. And Alex Coffey's been all over it. So let's check out Chipotle. Chipotle moved higher after its earnings last week, but has pulled back to start the week. So now Alex has been coming through. And what stands out to you when you look at the trades for Chipotle?
Yeah, Nicole, this one really stood out to me. A trader across several fills in the first half hour of trading this morning sold a total of 26,395 put contracts expiring in the June monthly cycle. That's June 18th, about 44 days from today. The 27.5 put strike for roughly 27 cents. It was a combination of 27 and 28 cents. So they collected over 700,000 in options premium, but essentially assumed the risk of potential assignment of 2.6 million shares, a little bit more than that, honestly, which is just shy of $72 million worth of Chipotle stock. So this is a big, big move indeed, Nicole, as this trader in a neutral to bullish fashion is potentially interested in acquiring some Chipotle below the market.
All right. Well, we'll continue to follow that one. What about Devon Energy? The shareholders recently approved a merger with Coterra, right? So now you found a bullish bet on Devon Energy during the session today, which is slightly higher. Let's talk about Devon here.
Yeah, looking for a move higher here in Devon shares. So the last trade was selling downside, hoping the stock would maintain its levels now or risk assignment. This trader looked to outlay options premium in order to acquire unlimited upside potential. So they bought 10,000 of that same June expiration, 55 strike calls, and they spent $1.50. Well, this makes the math really easy here for us. It means the premiums that they spent on this was 1.5 million exactly, and they have a break-even point of 56.50. So in exchange for that $1.5 million in options premium, they essentially have the risk to the upside, the profit potential to the upside of a million shares of stock in this particular case. If the stock were to move, or in the case of Devon, if it were to move higher, get through that break even and beyond.
I was reading about energy projections, and one, big name on Wall Street was saying how devastating it really could be to have these higher energy prices. It could be global recession. Another one said, as soon as this Strait of Hormuz is done, it's going to be A-OK. So it's so interesting how some people are taking this global story and making it, catastrophic potentially, and others are really so aloof and shaking it off. Right? I mean, it's sort of interesting to hear the two sides, isn't it?
Yeah, it really is, and it seems to be, really the read-through on geopolitics is just watching those energy markets. And so oftentimes we see the crude oil markets and other assets within that space, the commodity space, move quicker than the headlines. So sometimes you see crude oil move, and then you wonder what the headline's going to be.
I don't want to leave out Intel because we had such a great conversation with Kim Forrest, and it's just rallying to new all-time highs again. Incredible. What options trade did you find?
So it's a neutral to bearish strategy on the surface level, Nicole, but more than likely, this is a trader who was already long 3,000 of the 110 calls in June, and they sold those and then kind of captured a credit and bought further out of the money calls. So in some ways, this might have been capturing the profits that they had and taking some money off the table, but the end result was neutral to bearish, and so they did leave some money on the table as Intel's moved higher today. 3,000 of the June 110, 125 call spreads for 445. This is trading closer to $5 now, so it hasn't worked so far.
I mean, it's up over 400% in 1 year. It's had such a great run up. I'll keep an eye on the S&P here because we got close. 72.72 is the record intraday, so folks watch for that. You could have a record close anyway. In the meantime, Alex, thank you. Thank you, friends, for being with me here on the watch list. I'm Nicole Petalese every day at 9 a.m. and 2 p.m. here on Schwab Network. I'm so glad that you are with us. The NASDAQ hit a record. Okay, much more coming up. Keep it here. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Vardis, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on the show. We will look at the run-up in semiconductor stocks in the tech sector and discuss what the options market is showing on the volatility front. Later, we'll take a look at the boom in CapEx spending and how you should be allocating your portfolio in the space. After the close, we have earnings on the way. We'll break down reports from Momentum, Strategy, Arista Networks, and AMD as soon as they come out. But for now, Marley, walk us through what's been on your radar today.
Oh, likely some of the things that have been on yours, Sam. Intel hitting a new high today and is the top performer on the S&P 500 on reports that it held preliminary talks to take on Apple as a new customer. Bloomberg reporting that the iPhone maker is considering enlisting the company's chip-making services, which would mark a major win for Intel's foundry business if this turns into an actual deal. And Shopify shares lower after posting top-line growth, but weak earnings in the first quarter. Revenue grew from 34% from the year ago. Gross merchandise value cleared $100.7 billion. Both of those topped estimates, but net income missed. And after including some investment losses, Shopify swung to a loss of 45 cents, far below the forecasted profit for 24 cents. And PayPal under pressure today after commentary from its new CEO caused the stock to reverse course on its post-earnings pop. The payments giant put up earnings and revenue that both bested expectations, but a new reorganization and cost savings initiative announced on the call sent shares lower in after-hours trading, and that continued into today's session. We'll break down all of those numbers, but let's take a look at where we are today as we near the end of trading, holding onto the screen across the board that we've seen throughout the day. The S&P trading up more than 0.9% higher at 72.66. On the NASDAQ, we're 1.4% higher at 28,049. On the Dow, we are 0.7 higher, 49,290. We've added about 350 points today. And the Russell 2K is at 2845. That is up 1.75% right now. The 10-year still over 4.4. We're at 441. The dollar at 98.30. Gold is 45.70 a troy ounce. Crude oil still over 100, but we have pulled off those highs. We're 102.18, down almost 4% today. And Bitcoin is at 81,845. That's up close to 2% and holding firm above that 80,000 mark for the last 2 days. I do want to check in with Sam, though, and see what caught her eye on the trading day so far. Sam?
Wow, Molly, you really can't ignore this memory momentum. Micron and SanDisk scaling new highs again today. These stocks continue to show strength, supported by solid earnings, which are being driven by continued demand and higher prices for these memory chips. The optimism also being fueled more recently by reports that seem to suggest the memory chip market could break from its typical cyclical patterns. Now, you mentioned that Intel Apple story. Shares in TSMC down, but take a look at the EWY South Korea ETF, which counts Samsung as one of its top holdings. That's also apparently in talks with Apple, and so the ETF is up over 6% this afternoon. South Korea was closed last night, and Samsung does not have a tradable ADR, so this is giving us the closest sense of some of the reaction to that when it comes to that particular name. The SOX index is at a new high today. AMD trading higher ahead of its report this afternoon, and that's set to be the next big test really for the semiconductor chip trade. Analysts are expecting a beat and raise quarter and want to hear about market share, any foundry capacity constraints as well. There's a view AMD really faces a high bar tonight after its monthly gain, its best it's seen in 25 years. So we'll have to wait and see what it tells us this afternoon, Marley. But I'll send things back over to you and Kevin in Chicago with some of today's top movers.
Thank you so much, Sam. Kevin Hinks joining us from the SIBO today to take a closer look at some of the big moves we saw today. But also, before we get to that, I'd love to get your thoughts on yet another record-breaking day. Now, this year we got the NASDAQ looking for a new record closing high.
Yeah, hello, Marley. I think today, which is looking like the complete opposite of yesterday, is just a simple case of you look at crude oil down 4%, and the rest of the market is going to find relief from that. Throw in a little corporate earnings and a couple of the names and some news like we're going to talk about in Intel, and you've got 9 of the 11 sectors in the S&P 500 higher, and the ones that aren't, financials and communication services, are only down very slightly. So we're a couple ticks away from having all 11 sectors in the S&P 500 higher. The economic data today, relatively strong. Good numbers from new home sales, a little bit stronger labor market from the JOLTS data and the prices paid, and the ISM was a nice surprise, coming down to 70.7. So good economic data, interesting earnings, but AMD ahead of its earnings and the Intel Apple news that we'll talk about. AMD and Intel off the leash, Marley.
They certainly are. So let's just dive right into Intel on these reports that it's having conversations about Apple potentially being a customer. Not the first time that we've heard they were hoping to add Apple as a customer, but this is the first time we've got multiple sources, multiple reports saying they are actually in talks.
Yeah, exactly. If you're going to name drop someone to be a partnership with, how about Apple as a partner? And so if they use Intel, and this deal is not confirmed yet, but there's certainly rumors and there's been meetings, but they're talking about using Intel to build their new chips. Like I said, it seems like every other day we're reading and learning about some new partnership that everyone's the partner with everyone as they work through this AI, future that we have. So yeah, Apple and Intel teaming up. Really good day for Intel. I had the stock up about 13% as we get to the 3 o'clock hour in Chicago, or 3 o'clock hour in New York. So yeah, strong day by Intel. And this stock, Marley, I was looking, it was April, the first week in April, this stock was under $18. It's now $108. Absolutely insane. A stock that was left for dead.
I mean, it's really wild to watch the rise of Intel as it just continues to try to rebuild this under Lip-Bu-Tan and how much it's doing here. But a really nice day, like you said, up 13%, holding on to that as we head into the close today. I want to take a look at PayPal, though, now. PayPal initially saw a nice pop after earnings, but then they had that call, and investors did not like what we heard from the new CEO.
Yeah, PayPal's just having trouble finding their niche where they are in payment. Obviously Venmo is extremely popular and growing 20%, but it's the other things in PayPal, and they just clearly didn't explain it well enough. And the fact that they've, with a new CEO, they thought there might be a new plan, and the stock looked like it was bottoming out. Well, now it's down about 9%. The revenue, remember, this is not an unhealthy company. They have a pretty healthy balance sheet and a fair amount of cash. They just have trouble finding their role in overall payment. Total payment volume up 11%, $464 billion. Revenue, $8.35 billion, up 7.2%. Earnings, $1.34, beating 127 estimate. But just like you see in a lot of these names, the way they guided, the way they see the future, the street just did not like it, Marley. Yeah, it really jumped on the numbers, but not so much after that. Where we find ourselves, guidance is such an important factor in earnings right now. It's earnings per share and it's revenue, but guidance is what really investors are watching for.
And with a name like PayPal, where the majority is in a neutral or hold camp, I think clarity was so important on the call. And most of the notes I read, TD Cowen ended their note that too much was left to open investor interpretation. Truist said something similar. The combination of the CEO not sounding great on the call, that's the language that they used, and some negative commentary on branded growth volume. It just wasn't the message that I think people wanted to feel confident after this surprise CEO change too. This wasn't a planned change. This was a brand new CEO that came out of nowhere.
It was a bit rushed, and all you've got to do is listen to the CEOs that do earnings calls correctly or do interviews correctly, like Ed Bastian from Delta. Very positive, always very upbeat, always spells out their goals very clearly. Some CEOs just do it better than others, Marley.
Yeah, certainly. I mean, Jensen Huang will probably fall in that camp too. He's masterful when he talks to the press. But let's talk to another one that's having a down day. We're talking about Shopify here. Our producer made a joke about shop till you drop, and I know he's not going to put it on the screen, so I'm going to say it so it's on the show. But, oh, did they drop?
They had metrics that we thought, because we talked about it yesterday, and they thought if they hit these metrics that they would put out a healthy vibe to the street, like $100 billion in gross volume, right? They hit 101 billion. And earnings per share beat 36 versus 32. Revenue over 3 billion, 3.17 billion. However, they just didn't guide strong enough going forward. Again, this is one where earnings per share good, revenue good, gross merchandise value solid number, over 100 billion. They put out really solid discussions and interviews, posts, but the street just didn't like it, Marley. But again, this is a pretty healthy company. They're buying back $2 billion in stock, but stock getting hit. I've got Shopify down 16%.
Yeah, I mean, it's you see year-over-year revenue percentage growth forecast in the high 20s for this coming quarter, but because that was in line, it wasn't enough. I mean, we've seen it time and time again across different sectors, different companies. If it's not a clear beat or a clear raise, it just hasn't been enough this quarter for what the street wants with this rally we've got going on. But Pinterest, though, coming out of nowhere seemingly yesterday with this massive pop. I remember we were on air covering a different company coming across, and I looked at Pinterest really quick to get to them next. They were up 20+%.
Yeah, up another 7% today. This is another story. Earnings per share, 27 cents. Nice beat. Revenue, 1.008 billion, up 18%. Monthly active users jumped 11% to 631 million. Adjusted EBITDA, 207 million, reflecting 20% margins. So this is another company who's moving along, putting up pretty solid numbers. The stock's had a big pop the last 2 days. So yeah, Pinterest, another good story. So we're covering 4 names, 2 solid up days, 2 down days. So and this is where we find ourselves. Earnings season is an entire market made up of a bunch of individual stories. You're seeing that play out right here.
Absolutely. Pinterest having that nice pop, up about 7% in just the last week. It's up more than 12%, but still year to date, those gains not enough to put it in positive territory, still down about 13%. Kevin, really appreciate you being with us to take a closer look at some of these moves we're seeing today. Kevin Hinks joining us from the CBO, and I want to send it back to Sam in New York.
Thanks so much for that, Marley. Well, coming up, we will look more into the rise in chip stocks today and take a look at what the options market is saying about the move. Market on close. We'll be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
How's it going? First day, so...
Sometimes, you know...
Next. Try it again?
You could have done better.
Please?
Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange alongside Molly Caden over in our Chicago headquarters. So we do have a nice risk-on day for these markets, of course, off the back of back-to-back losses for the Dow. We did have the S&P 500 and the NASDAQ snapping multi-session rallies there, but we are back in action to the upside today as we do have the NASDAQ 100 with this all-time high once again up 1.5%. A lot of this being powered by, as we mentioned earlier in the program, the chip stocks. If you take a look, the SOX index, that's at an all-time high. You've got Micron high, you've got SanDisk higher in double digits as well, as we continue to see, as I said, the memory momentum continuing. And then, of course, if you take a look at some of the Mag 7, you do have some of the drag coming from a couple of members there, i.e. NVIDIA, Microsoft, and Meta, as we do see some of those names underwater. But it looks like we're back to the sort of post-Mag 7 earnings type of performance we saw at the back end of last week, where Google and Amazon both pulling ahead with new highs as well today, respectively, both pushing up almost 1% higher. So that, of course, is where we're seeing a lot of the strength from. There have been a lot of conversations today around how there are parts of the market that are feeling a little bit stretched and sticky at this stage, but then that brings us back to the earnings, and I know we're going to be talking about that later in the program as well, as to how well they've been holding up. A lot of where we've seen the momentum is where we're also seeing that strong earnings growth really helping propel it as well. So I think that's really important. But taking a look at some of the futures products, this is obviously where we're seeing the tailwind as well. Yes, the US dollar holding firm there at 98.32, but if you take a look at crude oil, that of course has retreated to the tune of almost 4%, so that is helping things out of the margin as well. 102 on WTI or 109 on Brent right now. That is helping, of course, Bitcoin. We have seen that rallying in recent sessions, so some of this has of course got to do with some of the progress that's been made on the conditions around the Clarity Act. Obviously we'll get the next test for this entire space with strategy later on today, but then you have the yields backing off as well. Remembering, of course, we did have on the long end the 30-year pushing up over 5%. That is now sub 5% as we stand at 498, with the 10 yielding at 441. So that is very much what is helping put the wind in the sails of stocks today. Marley, I'll send things back over to you for our next interview.
Thanks so much, Sam. Joining us now here in our Chicago studio, Zed Francis, the CIO and co-founder over at Convexitas. Zed, great to have you back with us in person. You know, not a great day to chat to. We've got an up day. Semi's performing well. I love that you sent over your notes, as you always do for our chat, and you said semis to the moon. So what is driving this right now?
Yes, I mean, normally we come here and talk a little more macro, but decided because it is very interesting over the last month and change, and today, let's talk about semis. And it's something that's near and dear to our heart at Convexitas, because we actually run a very semi-specific strategy. So we really dig into the weeds. So is it like first half, like what is going on, actual prices of semis? And I think you can kind of split it into cyclical semis versus less cyclical semis. So, you know, the least cyclical would be NVIDIA. They're the highest value add chips. They are very software oriented rather than purely hardware. So that's the least cyclicality in the space, where the most cyclicality is memory. And what we've seen so far year to date is a pretty big contrast in performance between those two kind of barbells in the sector. And I actually think it makes a lot of sense. So why I think it makes a lot of sense is if you're max cyclical, that means the market is pricing in a cliff. You're going to have spectacular earnings, and then all of a sudden you're not, in a dramatic way. You know, we'll name out of the air and like aggressive numbers, like a Micron might be able to produce $150 of earnings in 2026, but the market says, 27, 28, that might be $8, like that big of a cliff. Now, if the view is, oh geez, the cliff's still there, these are highly cyclical things, but it's probably out one more year. Like that's in your model going from, that out year going from $8 to $150 in my dramatic example for Micron as a pure hypothetical. Like it is a meaningful change if you just extend that cliff of that drop in earnings when you hit that like down part of the cyclical cycle. If you just do 1 year, it is a real valuation change. Where something like NVIDIA, you're like, it's going to grow at 30 instead of 40% is the down move. It's not nearly as dramatic. So I think that's why we're getting this pretty big barbell in performance between max cyclical and less cyclical within the space.
We still seem to see that cliff being extended. It hasn't. Right. It certainly hasn't arrived. And if it continues to get extended, you highlighted that once it falls off, obviously we're going to see valuations change dramatically. But if it continues to be pushed out further, we're still seeing valuations change in the opposite direction. Where are we in that process right now?
Well, so I think a little bit of the point is the market actually is currently pricing the cliff, right? So it's already somewhat in the price of these names. And as the market gets confidence that that cliff is getting extended, that's why we see this rapid change in the price of the stock, because basically it's holding valuation constant. It's just saying that downfall in earnings is, another 6 months, another year, another 18 months out. And it's such a dramatic shift in earnings. That's how you can get these dramatic moves in price, because that's just simply valuation change. If you're like, oh wow, like my expectations were $8, now it's $150, that's a big move in earnings expectations for that, third year out, and thus you're getting these big price movements as that cliff gets extended.
And I was having a conversation earlier today on Trading 360 about Palantir, and that Palantir's issue from Anna Rathbun's point of view was that it's not an issue right now. She's looking at 27, 28 as a potential issue. She didn't call it a cliff, but I think she's saying what you're saying. We have growth concerns a few years down the road. What is actually going to get that long-feared cliff to finally show up? Is it competition? Is it getting closer to the completion of the AI build-out? What is it?
Yeah, I think the go forward, the most important thing is the credit markets. Will the credit markets continue to finance this growth? So if you're a hyperscaler, and they have been doing this a lot, in the last 12 months and maybe even accelerating, they're borrowing more and more money to go ahead and facilitate this infrastructure build out. And if you're in their seat, like what Meta was last week, 25 billion comes to the table, they're issuing, 10s, 20s, 30s, 40s, call it around on average 6%. Okay, they get a tax incentive to go ahead and deduct those expenses on interest, and there's also a tax incentive in terms of doing R&D today. So ultimately their bogey isn't even 6%. It's a lower than number than that. And if you're at those hyperscalers and you're like, somebody's gonna give me 30-year money and my bogey to out earn the cost of that money is sub 6%, I don't think anybody on those staff think they're less than, frankly, high teens % growth engines over the long term. So it's a massive spread. So even though, it seems like everything's getting more expensive in terms of these build outs, their view is, well, if I get to borrow the money to produce something that's going to grow in the teens, that's a massive spread. I should do that all day long. So as long as the credit market continues to lend them money at, these tight spreads and interest rates are approximately where they're at, I think they're going to keep going. And what we've seen so far is the market happily is lending them that money. Again, going back to Meta last week, it was something like close to 100 billion were in the order book for that 25 billion issue, and it traded well on the break as well. So we're nowhere close to the moment in time where the credit market, says no more. And I think basically these issuers are going to keep coming to market to facilitate this growth.
So if that happens, I don't know that we ever get to the point where they say no more, but let's say conditions start to tighten even slightly, where do we start to see the cracks show up first?
Yeah, no, so I think, as you say, like the cascade is these folks are, ultimate free cash flow machines, but if the market starts demanding more spread from them, like they'll likely be able to print whatever issues that they're trying to go to the market for. But if they start demanding more spread, it essentially starts crowding out other issuers that are less high quality issuers and create that spread widening, and that just kind of gums up the industry, right? Because if all of a sudden credit starts widening, that means mark-to-market losses start accumulating, that makes credit investors less proactive in terms of facilitating new issuance. And so even though, hey, Meta had an issue 50 basis points wider than they did last time. It probably doesn't affect them directly, but it can stall the credit markets as a whole in terms of providing that liquidity as easily as it is right now. So I don't think it's a failed issue, but it's if you start seeing they need to do monster concessions or things start trading poorly on the break on these issues, that probably starts signaling that, yeah, we're probably stretching the amount of liquidity they can absorb for these projects.
All right, we always talk about volatility while you're here, so I want to talk about that too. You highlighted that you're seeing some massive distortions between implied volatility and realized volatility in the semis. You even went so far as to say that you think volatility is actually more interesting than direction right now. So what are you seeing under the surface?
Yeah, so I do a little storytelling. So semiconductors are a very unique sector in terms of they've appreciated quite dramatically over the last 2 decades. There are companies that incentivize a lot of their employees with stock and stock-like compensation, and they tend to be pretty heavily concentrated in California. So what this means from a storytelling perspective is you have somebody that is either currently employed or used to be employed, is worth $30 million, and $27 million of that is in the company they used to work for at very low cost basis. They want to start living their lifestyle like they're worth $30 million, but they don't want to sell because it's a big tax bill. So what they've been doing is variable prepaid forward or publicly traded collars. It's all the same thing. It's essentially you buy a put, you sell a call, and you get a loan on it. And these types of strategies used to be for folks in the ultra high net worth, and you do it via variable prepaid forward, which is a single contract with a bank. But now in places like Schwab, you can just go into your brokerage account, go to the trade desk, say, recommend a caller for me, buying that put, selling that call against that single name, and Schwab will say, oh, we have a bank. We'll actually give you a term loan against this position. Forget just borrowing from your brokerage. Like, we'll go ahead and package essentially the same thing that those 100 millionaires used to do, even if it's a $1 million account. What all this means is all these folks are on the same side of the trade. They're essentially buying puts on these names, and they're taking a loan against it. And once they start doing it, they don't really get off the tracks, right? Because, again, you're doing this to go buy a house, go buy a second house, start living that lifestyle. So when that collar expires and you're like, I got to pay back the loan, you're like, well, let's just refinance it. Let's just do it again. So you get these folks onto those tracks, and it's growing from democratization in terms of easier access. And once you start, it's very unlikely you get off. You're still doing this until basically you get to escape the tax consequences and get a step up in cost basis. So what all this means is you got a lot of folks doing the same thing, and it's affecting price. And you can see this pretty dramatically in these single names. The downside volatility puts in these names is very well bid, especially in comparison to how much they're actually moving. And that's harvestable. You can capture that spread of the implied volatility in those puts being very elevated versus how much the underlying stock is actually moving. But it's pretty dramatic, and it's something we see as very much a structural change in the marketplace.
Zed, you always bring the best stuff to the show. Thank you for the examples. I love the real-world examples, both of Meta and also how people are funding their lifestyles through these collars. Really appreciate you joining us here in person. That's Zed Francis, the CIO and co-founder at Convexitas. And I'll send it over to Sam in New York for a look at what we have coming up next.
Well, we're going to look at the boom, Marley, in CapEx spending and how you should approach the space with your portfolio. Market on Close. We'll be right back.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Vadas in New York. Shares of Palantir are under pressure today, despite what looked like a strong earnings report. The company beat on both the top and the bottom line and reported its fastest revenue growth ever. Additionally, Palantir raised its guidance for the full year to 71% of revenue growth. All of that still not enough to have a positive day for the AI company. As we take a look at some of these names here, we have reporting after the close today. We've got Lumentum coming our way. They're trading up higher today, a nice day for them. Arista Networks will have them coming at 405. We've got MicroStrategy coming right as the bell closes. They're also having a nice day, up 1.5%. And AMD, of course, we will have, after those first three report, trading up 4% higher today in advance of those earnings. Now, I do want to welcome Sam back into the conversation and have our next guest joining us. Joining us now, Timothy Chubb, the Chief Investment Officer at Gerard. That's a Univest Wealth division. Timothy, great to have you on the show. Would love to just start with your thoughts on this action we're seeing this week, the earnings that we've gotten so far, the data out this morning.
Yeah, absolutely. Thanks for having me. Yeah, it's been a fascinating earnings season so far. I think, as sort of just optically looking at the headline number, 27%, EPS growth as we look at the data through Friday. But if you strip out some of the one-off effects and other income with, Google and Meta related to the Anthropic investment and some tax benefits, it's a little closer to 16. Still a great number, still outpacing what analysts and consensus had expected, 13%. So really helping, obviously drive markets higher. And it's especially interesting after we just witnessed one of the largest deep roasting from hedge funds in the tech space. And so it seems like everybody's piling back in now.
But Timothy, 13% as far as expectations for Q1 was already staggering. If you say 16%, I heard 18% today. And the forward-looking EPS estimates now for Q2 are looking at more than that, 20%. You're comparing that to historical trends of what, 7, 8, 9%? What is this telling you?
I think it tells you just how concentrated this CapEx spend and how much it's driving the market. Just taking a step back in the macro for a second, 2% real GDP growth on an annualized basis in Q1, 75% of that was from the AI build out. So, looking at the data, overall we're at, 751 billion, I think, in the hyperscalers that they're expected to spend in 2026. That's an 83% jump. And, as we say, what one person's CapEx is another person's profits, or another company's profits. And that's where we're seeing the rest of the market really broaden out from the earnings growth story. 16% this quarter. It's more than double what we saw over the trailing 4 quarters on average. And ultimately, I think it's finally seeing that AI spend work its way through the system in a year where we expect pretty massive enterprise adoption.
And so, Timothy, do you have any concerns that investors are at risk here of over-earning confidence from headline EPS prints right now?
Yeah, to some degree. Going back to the earlier question, looking at the numbers for Q2, we're actually lapping some tough comps from the second quarter of last year, and so that gives us quite a bit of comfort that overall there's kind of a lower bar, if you will, that we'll be able to jump over. What was interesting kind of coming into this earnings season, we really didn't see the revisions coming down in the weeks ahead of earnings season start, and so it's been a relatively high bar for us to see these companies jump over. And again, 16% earnings growth relative to the 13 is pretty strong. But I think it's important for investors to just think about diversification. As we look at other sectors, not just about tech. It's the tech spend that's benefiting the industrial sector, the healthcare sector, and how deep these roots are now getting within the broader market.
Do you think it's sustainable, these kinds of rates that we're talking about, just when you look at the macro picture? I mean, so far, the economy is telling the story that it's holding up for now. But I mean, you've got now conversations around the Fed potentially hiking rates. And I don't know how much that threatens spending plans at some of these companies, not to mention, you know, if we do start to see any threat of stagflation on the economy as well. I mean, just how much these companies are able to sort of keep up the earnings that we've seen so far.
Yeah, it's a great question, and I think you implied it and hit the nail right on the head of, you know, sort of what breaks this, right? So just going back to the macro, 75% of GDP growth in the first quarter was coming from the AI build out. We're really levered towards that on the macro front. Everything else is growing at just half of 1%. And so, you know, what changes, you know, sort of the spending plans? Well, looking at the cash flow statement, so much of the Mag 7 and the hyperscaler cash flow was going towards this AI build out and those CapEx expectations. Now you're seeing all the debt come into market, and, you know, certainly that's going to be a tricky situation. I don't think the Fed is necessarily going to raise rates. I think, you know, a cut is more likely in the back half this year, or maybe that gets pushed into early 2027. But what changes the dynamic is the access to capital. And if rates in the 30-year, you know, continues to climb up over 5%, there's lots of supply coming into the market. You're starting to see these hyperscalers, you know, change the composition of how they're financing, you know, this CapEx growth. Now it's moving to the balance sheet from the cash flow statement. And I do think, you know, that it, you know, bears, you know, really close watching, you know, from here on out. The other, you know, component of that, you know, too, is all this equity supply that we've got coming online soon. Anthropic, OpenAI, ultimately we've got, you know, a huge SpaceX IPO, and how much does that suck liquidity out, you know, especially with some of the favorite names within the Mag 7 and the tech names that have been running up so far this year.
And I was just talking to our last guest. I'm not sure if you could hear about that capital and maintaining access to it and how that can completely change the narrative here in the space, particularly when it comes to the semis and the hyperscalers. So as you look at these names, you know, how are you deciding what separates the winners from the laggards right now?
Yeah, I think, you know, the market has really gone from anything that's been exposed to AI is wonderful, and, you know, those earnings growth expectations continue to get revised up, and we can just hang out there. And that was really the case for the last couple of years. I mean, NVIDIA in particular, you know, driving so much of the index returns, you know, the back-to-back 15% gains that we've seen for the S&P. But, you know, again, fortunately, that's been, you know, broadening out a little bit here. But, you know, overall, I think it's important just to have that ballast, you know, the you know, sort of guardrails and rumble strips, if you will, or at least that barbell between, you know, some of these secular winners within the AI build out, having that diversification, you know, across sectors, and leading into some of these, you know, areas, especially as the last guest was talking about, with option volatility, you know, creeping in, you know, given how we're in this, you know, factor-driven and algorithmic, you know, trading-driven world. There's been these like kind of rolling blow-ups, you know, certainly with software as Claude models were being released over the last quarter or so. And I think, you know, taking a hard look at some of those names 3 to 5 years out, and, you know, we'll do our DCF and ultimately get pretty comfortable with the assumptions, despite, you know, what the market reaction's been. So it's, you know, definitely a good time to take some profits, especially on Micron, for example, as, you know, we're pricing in a lot at this point. And as last guest mentioned, it's a cyclical, you know, side of memory, or excuse me, semis with memory.
But it's interesting, isn't it? Because the whole conversation in the last week has been around the fact that maybe, just maybe, the memory space is starting to sort of break its traditional cyclical patterns, and that's what sort of provided another sort of tailwind for some of these names. We'll have to wait and see. But I did want to pick up on what you said about Micron, because I see you are trimming semis where positioning is stretched. I mean, arguably, Tim, the whole thing looks stretched. I mean, the NASDAQ 100, what, a 14-day RSI of like, what, 73? I mean, it's overboard. The SOX is what was up in the 90s just a couple of weeks ago with that 18-day record run. But the interesting part about these sort of bubbly parts of the market is that it's been backed up by strong earnings. So how do you pick and choose where to sort of take money off the table there?
Yeah, you know, I think it's really helpful context because, you know, as you mentioned, you know, technicals and how much this has run in such a short period of time. But, you know, just a few weeks ago, as I think I might have mentioned before, you know, we were one of the largest hedge fund degrossings at tech that's occurred in a decade. It's a positioning event. It's not a fundamental one. And so when everyone's running from one side of the boat to the other, there tends to be a lot of babies thrown out with the bathwater, and I think that's been especially true within financials, with many of the names, especially underwriting the debt issuance like an S&P Global, for example, that have really gotten sort of tagged with that AI disruption narrative that just simply isn't showing up in the fundamentals, despite how positioning has whipsawed some of these names around.
Timothy, we're going to have to leave it there, but we really appreciate you joining us today. Some great insight there. Really appreciate you being on the program. Timothy Chubb from Gerard. Coming up next, it's Options Corner. Rick Ducat will join us here in our Chicago studio to take a look at the options activity on AMD ahead of its earnings after the bell. That's next on Market on Close.
My man.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time
Welcome back to Market on Close. AMD is set to report earnings after the close today. Analysts expecting earnings per share of $1.30 on revenue of nearly $10 billion for the chip maker. Investors will look for AMD to follow through on recent share outperformance, particularly after Intel's most recent report showed rampant chip demand. Of course, that means it is the focus of Options Corner today. Joining us now, Rick Ducat, our lead market technician, to take a closer look at AMD in advance of that report we'll be getting here pretty shortly in the next 20 minutes or so. But as we look at AMD and its broader performance against the market, how is it stacking up here, Rick?
AMD doing pretty nicely, kind of one of the strongest of the strong already. Really, everything kind of pales in comparison to the memory sector. But that rampant demand that you talked about is actually kind of the reason HSBC downgraded AMD the other day to hold from buy. The reason is that unlike Intel, like you mentioned, which can make its own chips and its own foundry, AMD is only a designer. It's one of these fabulous chip designers. It can't actually produce the chips. It has to rely on Taiwan Semiconductor for most of them. So all this demand means there's only so much production capacity to go around. So kind of an interesting, different angle to view this extreme demand from that actually resulted in more of a bearish move based on this analyst note.
Well, certainly you bring up a great point. That's why we saw Intel pop today, because TSMC is their primary maker, and they have to diversify now, potentially talking to Intel to get more access to chips. But as we look at it on its own, AMD ahead of its earnings, you can see that meteoric rise as memory is really outperforming. But what is the technical setup going in with some of those analyst adjustments you mentioned?
Yes, and certainly this chart is nothing to sneeze at here. We're up 250% off of those lows that were almost a year ago at this point. But really the interesting thing about this chart, I would say in particular, old highs that we saw here around earnings 2 quarters ago, that was a subsequent high here. Then it was our breakout points point. So 267 was a clear phase in this chart where we saw a strong rally beyond that point. Our sharp white trend line here pointing upward is still in play for now. We've seen a bit of chop recently though here. We had a gap that formed here, and then that was the subsequent low near about 310. Now we've established these highs, 362.79 for now. Our old highs in terms of a closing basis came in at about 348. So those would be some areas to watch out for in the coming days based on some of our earnings results here. So now if we were to think about our moving averages, our 5-day EMA in dark blue comes in pretty close to where our trend line is. That's around 347.40 at this point. If we were to break below that trend line, our 21-day EMA in teal, our monthly EMA, a good bit below current price activity. That comes in near 302.50. It will catch up in the coming days if things start to stagnate or drift sideways. Moving averages are inherently a lagging indicator. There's only so much they can do when price makes such a swift move. So RSI, also kind of an interesting picture here right now. On one hand, a little bit of bearish divergence here in that price made higher closes, but RSI was trending downward. Kind of complicated though, because RSI actually re-entered the overbought area today, which is a reading above 70. Typically that's a signal of strength in a trending market here. So after this brief consolidative period, we've once again pushed into this overbought area heading into earnings. So kind of unusual. Oftentimes you see momentum slow when we approach a known event risk situation here. Now when we look at volume profile, this is just highlighting the past 3 months here, just to focus in on a more granular read on the important volume levels here. Obviously, the big trading activity down here near the 200 level. The nodes that stand out from there are around 240 to 250. We also have here between about 272 to 287, and then also here until we get to our biggest node. This area is around 300 to 310. Up here, quite a few takers at these elevated levels, though, between about 330 to 350.
Yeah, right now we're at 355, again, 4% higher even so on the day. And with that interesting move you saw in the momentum, especially coming into an earnings event, did we see any increase or decrease action in options activity?
Only mildly above average. The sizzle came in at 1.14, which is 1.14 times the 5-day moving average of options volume. That comes out to be still quite a hefty number, 552,000 options at the time I checked here. About 60% were calls, so more skewed toward that side of the market here. Open interest, our highest month for this metric, June 18th, our monthly expiration, about 19% of all open interest for that monthly expiration here. When we do look at May, our 10-day expiration coming up next week on Friday, we have about a plus or minus 11.6% move. So certainly the market is prepared for some volatility on the horizon after this earnings event.
All right, volatility there could be, but we'll of course have it live for you. I want to thank Rick Educator, our lead market technician, for breaking all of the options action down on AMD in advance of that earnings event, which we'll have after the close. But before we get to that, we have overlooked stocks. So I want to send it over to Sam to find out who she and George will be talking about today.
We're talking about Rockwell Automation, Marley, after it spiked to a new record high today after earnings. So George Sillers will stop by, break down the news, what you need to know coming up next on Market on Close.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
How's it going?
First day, so.
Sometimes, you know,
Next.
Try it again?
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls?
Your fancy coffee, your giant TV.
It's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Market on Close. I'm Sam Vardas. On the floor of the New York Stock Exchange, Rockwell Automation is rallying to a new all-time high today after beating top and bottom line estimates for the March-ended quarter. So it's time now for overlooked stocks, and that is the canvas. So let's get to George Sillett, Senior Markets Correspondent, to walk us through here what we got from this earnings report. What did it tell us, George?
Well, I think this is an interesting space. We talked about, the aspects of industrial companies, especially companies that are in the electrical components and equipment industry space. And Rockwell's very interesting because it's very diversified. They supply the market with things like process sensors, things like robotics and motion control technologies, including software. But one of the other aspects of their business includes life cycle services like maintenance and repair for industrial manufacturing, including semiconductors. So I think that's a primary catalyst. The other thing is they actually do things like provide equipment and services for waste control, because in semiconductor manufacturing, there's a lot of waste, including wastewater and chemicals. And Rockwell is a company that does provide those kinds of fluid handling systems. So they did report, so there was a catalyst today that's driving the stock to the upside. They posted a really nice EPS number, $3.30 was the print. That was higher by 35%, beating the $2.88 estimate. So last year for the same quarter, they printed $2.45, and for sales, they beat the estimates fractionally at $2.24 billion, up 12% from $2 billion last year. I think the kicker too is to add to the movement that we see post earnings reaction, not just the beat, but they did increase their guidance, at least on an organic basis, for the fiscal year between 5 and 9%. So let's call it 7% at the midpoint. But at the same time, the EPS guidance rose at the midpoint. Prior to the rise, it was $12.17, but they moved it up to $12.80. So that's essentially close to a 6% increase in the EPS guidance for the fiscal year. And that's, I think, one of the reasons why we saw a nice reaction here in the trading day.
I suppose it's in the business of warehouse automation, as you say, and data center, semiconductors, and energy. So, these are all things where we're seeing obviously a lot of demand, particularly for a business like this. And I see that they did see improved metrics across all these categories, but the CEO also talked about the fact that capital investment remains muted in some verticals. I don't know where they sort of explained, where that pullback is or exactly why, whether that's to do with some of the uncertainties from a macro perspective or what have you, because it would seem that obviously a business doing this sort of automation and particularly data centers wouldn't have a problem with capital investment right now.
Well, I think there's an area that includes Rockwell, which is software. So there may be some weakness in the software aspects of their business. I think at the same time, robotics. Robotics has actually been increasing in terms of technology change and shift. So there may be some apprehension to deploy new robotics when technology is adapting and changing rather quickly. But nonetheless.
Yay. Look at that. Look how pretty that is.
What was resistance now becomes support. God. $72.65s. Damn. Woo! FDA blocked publication of finding COVID and shingle vaccines were safe. Bonds in danger zone. Bonds in danger zone. I don't know about that. That was easy money right there, buddies. So I'm sitting down there at the IRS building, I'm talking to these two air guys, and I look at my phone and I say, hey, I think I'm going to grab a put here. And they said, what? I said, watch this. Then I'm driving home and I'm seeing that big old fat candle and I can't get on my phone. Spies at the VWAP. /ES is at the 200. Wow, that's crazy. We have less than a minute. They're saying bonds are in the danger zone. I don't know about that. They were overreacting this morning, these jokers. So,
political risk continues to be discounted here. We're going to be focusing on earnings. I think AMD has a very high bar going into tonight. And if you look at the last
AMD has a high bar
negative the following
because it's overbought.
The following 2 days, if you will, when it comes to AMD. So very high bar. Lisa Su has to definitely connect when it comes to the conference call and really not spook the investors.
Washboardjim.
Unravel some of the gains that they've seen over the last couple of weeks.
Yeah, she's going to have to convince the markets of a lot, particularly like she did at Investor Day, really emphasizing, how AMD is a strategic top customer of TSMC when it comes to some of the foundry capacity concerns. But we'll learn about that in the next 15 minutes or so. Plenty of earnings to get you across on the other side of this bell, but we've had the NASDAQ, the S&P 500, both at record highs today. A very nice day for our chip members, and of course, some record highs for our Mag 7 as well. Here's your bell. Out with some nice gains here, of course, coming off the back of those back-to-back losses for the Dow, but we held up today. So the S&P 500, 72.59 there, up 0.8%. The NASDAQ 100, 1.3% higher. Of course, a lot of this was being led by the semiconductor chip names, as we mentioned. We also had, as we mentioned, these records or all-time highs for Alphabet, for Amazon as well. The Dow Jones putting on 0.7%, and the Russell 2000 up 1.8% as well. So the small caps are also joining the rally here, the more sort of rate-sensitive areas of the market. Technology was really the winner on the day, as we can see here, up 2.2%. So very strong day there for some of these technology companies. I mean, a lot of this has been supported by strong earnings as well. The next test for this chip trade, no doubt,
we're going to find out about AMD.
We're just minutes away from, so all eyes are going to be on that to see if Lisa Su and co can step up to the mark as far as what they're going to say about overall market share, CPU, GPU demand as well, and that addressable market. Comp services down, but discretionary was higher, staples were up as well. Looking at the rest of these sectors, I mean, pretty much everything was in the green. Real estate was higher as well. Remember, we got those new home prices earlier, the sales, I should say, this morning, which ticked up again for a second month. So that was helping.
See, that's one thing about Buffett.
Home builders today.
Buffett usually he didn't trade in tech very much, so he missed out on a lot of good tech plays, like Tesla. Went $60 all the way to 2,200. He was in IBM, but he was more or less in home building stocks and Coca-Cola. So when they compare the Buffett theory to what's going on today, I just don't think you can do that. Get away with it. I wish I'd have held on to those ones I had this morning. It shows you, it's shit. It would have been a real good day if I'd have just held them. $172 to $650. Had the 70. Oh God. Oh well. 72.40s. Let's see where they went. Yeah, I don't know about the 72.40s. They probably went to zero. That's all right. I had a good, I was very distressed today because I didn't trade like I should have. But I've been getting into these sell-offs at the end of the day. I had 10 o'clock thinking, okay, we're going to pull back my time, 11 Eastern. And it didn't do it. It just kept going. And I'm going, no. So I got to, every day I go back and I backtrack my trades and I look to see what I missed and what I didn't miss. And like yesterday, was beautiful. Yesterday was just a great day. And then today, I carried the load from yesterday, think I was going to do the same thing and get away with it. But nope. Yeah.
Yeah, I mean, they continue to gain and buy Bitcoin. Obviously, we go through these cycles within the crypto industry as a whole, and right now you can make the case that maybe we were in a bear market when it comes to Bitcoin. I think
was it Mr. tonight?
And that does make it a little bit more difficult for this company when it comes to attracting the retail asset flows to go into this name. On the other side of that, when they are still buying Bitcoin, when it's trading at a relatively lower,
MSCI.
It's dollar cost averaging. So as it continues to go back up, it's going to be a little bit more of a leverage play back to the upside. I'm not really too focused on the Bitcoin yield. I know that obviously representatives from that company will really tout that number, but obviously it's going to be very volatile just given the fact that prices for Bitcoin itself moves very dramatically, both to the upside and downside. So it's a company that's going to be a leverage play, and I think until they state otherwise and try to change their direction, I think the market's going to leverage it as a proxy for Bitcoin exposure, and that's it.
And Sam, any thoughts here? I mean, we've seen Bitcoin together. We've watched it fall off, close to 40% from its all-time highs. It's having a nice couple of days here the last 48 hours. But, what do you expect to hear on the call here?
Well, I think we're sort of building on what KG was saying. It was interesting that Michael Saylor over the weekend had actually said that they'd hit the pause button on their weekly purchases of Bitcoin ahead of Q1 earnings here. Obviously, being a top corporate holder here, it's caught a lot of attention because they've been accumulating steadily, as we know, and this is the second break that we've seen this year. So obviously, that's going to be a big focus. But yeah, I mean, as you say, the Bitcoin price, I guess what's encouraging is that this week we have started to see it recovering. What is it, like a 3-month high right now? I mean, part of that is said to be, as I mentioned earlier, on obviously some of the progress that seems to be have made.
Come on, I don't want to hear about Bitcoin.
Underweights rather coming into the year, so we feel like we've already checked that box. Consumer staples is one that doesn't score so well in our analyst survey that we did recently, where we asked our analysts all these different questions: valuation, demand, war impacts. But the sector's actually done pretty well, so we've got a little bit of a defensive, undertone to that.
I believe to reduce estimates in the digital asset recently lowered their price target on strategy to
Mr. Knife
60 but kept a buy rating. So you just wonder how much that has changed given the current momentum we've seen in Bitcoin, particularly just this week, Marley.
All right, and I want to pivot over here to Lumentum. Their results coming across as well. Take a look at this name. We are still looking for some direction and strategy, mostly unchanged, but Lumentum pretty firmly down now, about 7% as these numbers are coming across here. This is their fiscal third quarter. EPS coming in at $2.37.
What's the ticker?
Beat the consensus estimate,
Check.
looking for between $2.24 and $2.27. They also reached a record
LITE.
$808.4 million. That was growing 90% year over year. Their adjusted gross margins came in at 47.9%. That beat expectations for 45.1. Operating income at $260.7 million.
$1,000?
Exceeded estimates, looking for 245.5. For their guidance,
Oh, no.
coming quarter, Lumentum
This is horrible.
EPS $2.85 to $3.05. That's above the consensus, looking for $2.60 $1.69. Revenue guidance for the fiscal fourth quarter looking for $960 million to $1.01
$808 million? That's horrible.
Looking for $900.
I can't believe this stock's up so high with $808 million in earnings. Trump. Geez, $35 3 years ago, and it ran up to 1,000. I would have bought a put on that if I'd known there was a. Estimated earnings per share versus. Oh no, man, this is a horrible. This is a.
Data center space here. I think it's just very hard for a stock that has run up so aggressively.
Oh hell yeah! I mean, this is horrible.
To try to beat and exceed and have the stock move another 20-30% to the upside. It's just a very high bar here. But the earnings itself and the guidance.
Very high bar.
Relatively healthy.
All right, so the bar just a little too high potentially for Lumentum. Still waiting for that
No
call.
shit.
Getting down about 8%.
If it made like $5 billion a quarter, yeah.
Across the wire here as we take a closer look. ANET right now in terms of the action we're seeing down close to 9%. So let's walk through these.
That's nuts.
First quarter. They reported revenue of $2.709 billion. That's a 35% year-over-year increase. It also topped estimates looking for $2.613 billion. Not a huge beat, but a beat. First quarter EPS coming in at 87 cents. That beat the estimate looking for 81 cents. It was a 33% increase year over year. The company also generated cash flow from operations of $1.69 billion in the first quarter. For the second quarter, they're looking for adjusted EPS of 88 cents versus the analyst estimate looking for 85 to 86 cents. The company expects the revenue for the second quarter to come in at about $2.8 billion. Analyst consensus was looking for 2.77 to 2.8. So those just slightly better than expected, but you can make an argument that they're in line. Q2 estimate operating adjusted margin expected to be between 46 and 47%. But we are seeing ANET fall on the heels of this report. KG, they've got their first quarter beating estimates, second quarter outlook arguably in line. What's sticking out to you most here on the numbers we're getting across now?
I would say that probably from the street or the whisper number here, they came in line with the street's expectations. Kind of surprising, just given the fact that we have seen this ramp up when it comes to the hardware and the networking.
Always clean this Jim.
Hey Jim, this is Ty with Conley again.
Yes.
Hey, I am sorry to bother you, but after you left, we called Ashley and she asked us to quote the replacement for unit number 12.
Yeah.
Would you be able to come back and let us back into the mechanical room?
I think you can get in there.
Can we?
Yeah.
Okay.
Yep. I think I left that door unlocked unless you locked it.
No, I did not. Okay, sir.
Okay.
He said he thinks he left it unlocked for us. Thank you.
Yep. That's number 12. I think. Yeah.
Okay. I'll probably service in the elevator, but I'll call you back if we can't get in.
Oh yeah. I'll run down there I'll head on down there, but I think you can get in.
Okay. Sounds good. Thank you, sir.
Okay. It's the door on the right.
Okay.
Upstairs.
Okay. Thank you.
Yep. I'm gonna head back down there. SMCI popped. And this one will drop again too. I'm going back down there again. Looks like AMD earnings going to come in around 4. So I'll catch you guys later. Oh, they came out now. I figured this was a little bit overbought.